All right. Hello, everybody. It is September 21st, 2023. I am sorry that I am late today. I had a pretty hectic morning, to be honest. I've been running around doing a lot of different things, going back and forth, but I am here. Thank you all for being here. Oh boy, we've got one hell of a morning. You know, this is the cool thing about doing the morning open every day is that we have a little bit of a community here. And sometimes it's just better to experience pain with a community versus doing it alone. And in 2020, when or not 2020, 2021, when my portfolio, 2022 really, right? When my portfolio tanked, didn't have too much of a community. And so it kind of sucked when you had some of the red days, but we're all here together. So maybe the red is not going to be as painful as we think it's going to be because we're all here together. Now it's going to suck even if you're here together. Like it sucks losing $20,000 in a day, even if you have a community to lose it with, but maybe it feels a little bit better. Right now, my portfolio is down this morning $600. For the week, it's down $9,000. So it's been a pretty rough week, but nonetheless, we're all here. And we can discuss it all together. Deltzy, Marco, Johnny, Garcia, Edmund, thank you all for being here. Ray, Kerry James, Joseph Viegas, Mark, Imnop, Benny, Tesla, Alan Tier, SJ80J, Jeremy Black, Mark LeBlanc, Johnny, Miami, Ren, Ray, Tashi, Axel, Tessa Best, Cayos, Perez, Technical Trader Wrong, F3, Felicia. Thank you all for being here. Invisible Voices, Chris Clark, David Williamson. Felicia says, we are stronger together. Red means shopping long-term brothers. Now, let's get into that right now. Okay, what is the reason for the red? I believe that the reason we are red right now, and we got a lot to dive into, so we got a lot of topics to go to kind of explain why this is red, is treasury yields. Okay, so my hypothesis on why the market is so red right now and why we're experiencing a lot of this pain is because of where we're seeing 2-year and 10-year treasury yields and where they are right now. Now, and I'm about to share it in a second, but the reason we have the 10-year up at 4.486%, which is the highest since 2007, and the reason we have the 2-year at 5.1%, highest since 2006, is because of what the Fed said yesterday. Unfortunately, even though the Fed paused, which is what the market expected, as you can see, the 10-year at 4.486, the Fed said we are going to be higher for longer. And because the Fed said we are going to be higher for longer, the market is expecting we are not going to be cutting rates anytime soon. In fact, yesterday, the market thought by May of 2024, we would see our first rate cut. That is now changed to September of 2024. And because of that, we are seeing just a lot of more shock in the market. As you can see, the 2-year at 5.178%. Then think about this. You can get 5.1% on your money if you put it in a 2-year treasury bond. Then you can get in a lot of riskier assets. As you can see, if we look at the all-time chart back in 2007-ish, we were around this range, 2006, 2007. So 2006, we were at 5.1620. April of 2006. Today, we are at 5.18. We are higher officially on the 2-year than we were back in 2006, and 2006 was just 2 years before the great financial crisis. That doesn't mean we're going to get into a great financial crisis. What that means is that the bond market is expecting better yields from buying U.S. government debt than buying assets, i.e. innovative companies in the United States. And that's some of the reason we're seeing a lot of the pain that we're seeing right now in the markets. And as a result of that, we are seeing some bloody markets. I'm going to pull up the charts real quick before we keep going further into what happened with the Fed yesterday. For those that don't know what happened with the Fed, the TLDR is Jerome Powell got up. He said we're going to be data-driven. He said we're likely going to keep rates higher for longer, and he said there's a possibility we're going to raise rates in November. Now, he didn't confirm or deny the raising of rates. I personally believe the Fed is done raising rates, which is why I kind of think I'm like more 80-20 that today is a buy the dip versus a today is a be scared of the dip type of day. Because if you think the Fed is done with their raising rates cycle, what is the logic for why people think the Fed is done for their raising rate cycle, including me? inflation is falling off a cliff. There are a lot of factors for why it's falling off a cliff. I've talked about it for the past couple of days on the morning open. Housing is coming down. Oil is going to eventually stabilize. Used cars index are coming down. The rents are coming down dramatically. Housing supply is going up. And the way the Fed has the methodology to track these things is like archaic. So eventually it's going to catch up to them. A lot of these things are coming down, which means I believe inflation will come down. It just hasn't caught up to the Fed and their methodology for tracking it yet. Once it does, they're not going to have a reason to raise rates. And so to me, inflation is coming down precipitously. It's just a matter of time for when we see it, which is why I don't think today's really the scariest day. It's more so a question of how long are rates going to stay at this level. And if inflation comes down pretty dramatically and we have a overall okay unemployment rate, I think we should see a cut by first half of next year. So around May versus September. Palantir at 1450 in the pre-market, down 4%, 1415. Nvidia is at $412, down 2%. S&P 500 at 435. Now, although I say today is a buy the dip type of day and not be afraid of the dip type of day, there are some stocks that you have to be careful about. So, for example, Nvidia at 412. One would argue down from 515, that's a great buy the dip opportunity. The problem is Nvidia is one of those companies that has had a market premium for a very long time. And on a day like this, these are the types of stocks that get demolished, right? So, for example, Robinhood is a stock that I believe today is a buy the dip on because it's at $10.06, $7 billion in cash, $3 billion for the brokerage. The market cap is $9.3 billion. It's going to be close to 9 or below $9 billion by the time 9:30 Eastern hits the market, right? By the time the market opens, this stock is going to be down another 2%. Now, when that happens, to me, that's an opportunity where you look at like, does Robinhood go to $8, $9? Does it really go to $7? Do we really think it's worth nothing? Like, probably not, right? This is an opportunity that I think makes sense to buy the dip. Same thing with a company like Palantir. Although I think Palantir can keep dropping, I don't think it's horrible to start buying in at 14, 15. Below 14 would be perfect in my opinion. But let's see if it can get below 14 because you don't want to be super greedy. You don't want to be waiting for the reddest of the reddest of the red because there's not that big of a catalyst for the reddest of the reddest of the red. Interest rates are going to stay normal. Or interest rates are going to stay where they are right now. Jerome Powell is likely not going to continue. I mean, you have to ask yourself, what is the catalyst to get to Palantir at $10? What is the catalyst to get to Nvidia at $150? Like, I don't think those catalysts exist. I think on a red day, everyone thinks the sky is falling when in reality, it's red because the market's red. And then you just move on and then things get back to normal. So there is some buy the dip opportunities today, but I don't think stocks like Nvidia are a buy the dip opportunity given how much of a market premium they've had for such a long time. And that's where I think there's a difference here. Walderine says, good morning. My red shirt is in the laundry. So today might be the day to break that red shirt out of the laundry because it's going to feel red. Jobs data coming hot. We're going to check on jobs data in a second. I believe it came in, but I'm going to check on it in just 1 second. Amit, SoFi's is in the 7 is a buy. Absolutely, in my opinion. SoFi in the 7s is a buy. Do we get SoFi in the 7? Maybe. Look, we've held $8 for a very long time. And as a result of holding $8 for a very long time, we've been able to see SoFi have good resistance. 1 sec. I have to text someone. Okay, cool. And as a result of that, look, could SoFi fall below $8 today? Absolutely. Is that a reasonable time to buy? I personally think yes. I mean, I will be DCAing today if SoFi falls below $8 because it's held that resistance for so long that it's rather unlikely that I think it doesn't rebound back to that level. Now, granted, if like either today is going to be a buy the dip or it's going to be a falling knife. It could very well be a falling knife for a lot of these stocks. The question becomes, how long do you think that falling knife actually lasts? I don't think there is that much momentum on the downside outside of the fact that it's September. Maybe there's a government shutdown coming, even though I think that's not going to be the case. And we got Jerome Powell being Jerome Powell, and so the market's reacting to Jerome Powell. The one thing that could break the thesis, and this could be like a cataclysmic market collapse throughout the end of the year, which again, I don't think is going to happen, but the one thing that could make that happen is bond yields explode, right? The 2 years giving you 10%. the 10 years giving you 6%. Like if that happens, okay, there is no reason for money to be going into risky assets like stocks, because if you're getting 10% from a 2-year, that's crazy. But now granted, if a 2 year is giving you 10%, we're in a world of trouble, right? Like forget the stock market. We've got a lot of bigger issues going down. I don't see that happening. I don't see the catalysts for that to be able to occur. Inflation is coming down. The Fed pretty much said we're on track to try to get a soft landing, even though they said they can't guarantee it. I think today is an overreaction by the market based on these rates for higher for longer. And as a result of that, they're scared. And so they're just selling it off and bond yields are going up. But I do not think at all that this is a reason to be really scared for today. How long do you think the dip lasts? I think it could sell up through the end of September. Look, I think that could happen, but quite frankly, and I'll catch some shit for this next week if it keeps going red. I don't think this dip is like the dip that lasts, that is like that prolonged red dip. Now, granted, I'm also on the record saying I think the S&P could correct 10%. We could hit to 420. So, I mean, there's two camps to where this goes. The S&P either goes to 420 because we haven't had a 10% correction and bond yields are up. The government shutdown might be a catalyst, and the stock market in general doesn't like what Jerome's saying about higher rates for longer. So we just rip off the Band-Aid. We go down 10%. I think if that happens, then a lot of the money that's on the money market funds and on the sidelines finally comes in and tries to get in stocks at some juicy prices. If we go to 420 on the S&P, you'll have Robinhood at around $9, probably $8.50. You'll have Palantir at around $11, maybe even $10. You'll have Tesla probably in the 230s. You'll have Nvidia definitely below 400, around 350. So if that happens, then that's great. The problem is there's a lot of money that wants to get into the market, as per Mike Wilson, who's one of the JP Morgan top analysts, that hasn't gone into the market because they were so scared all throughout January. And then as the market rallied 15% year to date, they couldn't find that entry time to get in. And so when you've got a dip like today, even if we're at 435 on the S&P, let's say we get to 430 on the S&P. Let's say we get 428 on the S&P. There's going to be a lot of money that finally decides to participate in the AI explosion, GDP, productivity, all the, bull theses that are playing out that you haven't been able to get your money into because you were just so scared this year. I think that money starts to come in, and I think it starts to come in pretty dramatically. So I don't think this is a dip that lasts really for a hard, long time. Someone asked me, am I buying stock or leaps when it comes to SoFi? I will be buying leaps. If SoFi goes below $7, these leaps will be a little bit cheaper, or below $8. And so I'll be buying a little bit more of that. I do want to say I have been buying some Google as of yesterday. I've been doing a lot of DD. I've been trying to understand a lot of DD around the mega cap tech stocks that are undervalued. I've obviously been talking with Chris. Chris has been very big on Google if you watch Finance Junkies, and he's been telling it to me for like a month now. So I know he's been publicly talking about it, but he's been texting me and we've been going back and forth about Google, challenging the bull case, bear case, etc. It seems pretty obvious Google is probably the the most undervalued mega cap tech stock that has the most potential upside in the context of AI. If you look at how the market's valuing Microsoft at 2.5 trillion versus Google at 1.72 trillion, and where the commercial use cases are for Google, along, and here's the kicker, with the stock buybacks Google's going to be able to do by 2026. Google to me seems like one of those companies that is very interesting. And so we'll talk more about that later, and we'll probably talk about it with Chris. But that is a company I think on a bad dip, Google down 132 in the pre-markets. That's a company to also look at right now if you are in the mood to be thinking of buying the dip today. Now, if you are buying the dip today, I really would not, if you have 50 grand to buy the dip, I would not put all 50 grand today. I would put like maybe 10 grand out of that 50 and kind of see. Tomorrow's a Friday. The market tends to sell off on Friday, kind of see where that plays out from there. I would not go heavy on the dip today because one red day, we might see a little bit more red in the next couple of days and then have a recovery versus one red day and then immediately we have the recovery. So I do think there's going to be a little bit of essentially opportunities for us to go with, but I do not think this is a prolonged month-long dip where, shit hits the fan like it was back in 2022. If that's the case, we're in a whole world of trouble. I just don't think there's enough catalyst for that to happen given the research that I've been able to do. Google is so underrated and undervalued in the market. I agree. I mean, Google announced a partnership with Uber yesterday. They're bringing commercial chatbots to Uber. So now you're going to be able to interact with an LLM while you're using Uber. Uber has, I think, hundreds of millions, if not billions of users worldwide, and Google's implementing that worldwide. Google is a global company implementing AI. That means billions of people having access to AI. YouTube is continuing to grow. Google also is reportedly shutting off their deal with a chip supplier this morning. The name of the chip supplier, let me pull it up real quick. I know this because I texted Chris about this. Broadcom. ticker symbol AVGO. So Google is reportedly considering dropping Broadcom as a supplier of AI chips as early as 2027. And that scenario, Google would fully design the chips known as TPUs in-house, with the move potentially saving billions of dollars in costs annually. And that was reported by The Information. So Google, to me, is the company on the dip that, everyone's looking for a dip company. I think Google is that company, just given the potential of their AI opportunities and how the market is valuing them in comparison to some of these other AI stocks. So makes sense to me like that. What are your thoughts on taking a personal loan to buy Palantir? My thoughts are, do not do that. I know how tempting it is to look at margin and to look at getting a loan and to look at, maybe lower interest rates in potential, maybe I have to pay a 12% interest rate on this loan, but I can get 20% on Palantir. All of that makes sense in the moment. And then you take the money and then you buy the stock and the stock goes down and then you're screwed. So honestly, it is not worth taking a loan. It is not worth going on margin just to buy the stocks. I think you should use those tactics if you are a highly professional investor. You've been doing it for such a long time. You're a trader. You understand how to deal with this stuff. You've had experience paying off margin and personal loans when it comes to investing before. If you have no experience doing it, do not do it now, in my opinion. It's just not the right time to do this. And in fact, there's a guy, Jason DeBolt, who sold his house to pay off his margin back in January versus taking on another personal loan to pay off his margin. So he was using margin and he was almost going to get margin call when Tesla went to 100. So in order to pay that off to keep his Tesla shares, he sold his house. So people have gone to extreme measures to make sure they don't get into that deep of a hole. So I just wouldn't mess with margin or a personal loan, because if you get into a deep hole, do you want to sell your house to pay that off? It's like it gets too tough. So I personally just wouldn't go for that right now. As Erwin says in the chat, all it takes is one bad trade. Look, and we've all been there. Erwin, he has been investing for a long time, so he's probably had some bad trades. I've had some bad trades. I've just been happy every time I've had a bad trade. It's not been on margin, right? It's been with my own capital. And yeah, you lose some money, you deal with it. But you lose someone else's money and have to pay it back, it's tough. It's very, very, very tough. Okay, Sachin, thank you all for being in the chat. Sachin, I would like to know your opinion as well. Do you think today's a buy the dip day, or do you think it is a falling knife? All right, so we talked about a bunch of things already. We talked about the Fed. We talked about the FOMC meeting. We talked about the reason for the red. We talked about some of the pain. Let's talk also about one good catalyst that's going on, which is the writer's strike. We are seeing right now some momentum in the writer's strike, not the auto worker strike, but the writer's strike coming to a final close. Let me pull this up real quick. This is going to be really good for Disney and Netflix in terms of them being able to move on with their businesses. So let me pull this up right now. Writer's strike. It seems like by Thursday, we are going to see a negotiation approved by both sides. Let me just pull this up real quick. Keep going from there. Sachin says, falling knives. It looks like I'm in cash and short-term account. Markets can remain lower and unreasonable for longer than you can stay solvent. That is probably true, to be honest. So September 21st, this was uploaded. This was updated 7:49 a.m. this morning. Hollywood writers and producers could be nearing an agreement to end the strike that has paralyzed the entertainment industry as high-level talks enter a second day on Thursday, with major studio heads now at the table. A source close to the negotiations told NBC that talks were productive and there was hope for more progress as high-level executives attended the negotiations for the first time since the strike began. So this is the first time that actual executives from Disney, Netflix, etc., are attending the negotiation with the SAG strikers. Remember, the reason for the strike is because of AI incorporating itself into the entertainment industry. Essentially, if you're a writer or an editor, you don't want some type of ChatGPT or Mid-Journey tool to replace your writing or editing capabilities. And as a result of that, there has to be some negotiation to leverage AI, but for it to not replace people. Until now, talks have been led by top AMPT staffers and labor relation representatives, with studio heads, including Disney's Bob Igers and Netflix Ted Sarandos, the CEOs of these companies, have taken a seat at the table, the source said, signaling a potential significant shift. So because they've never come to the table, the fact that they're coming today, that's why we're likely going to see a shift in some of these negotiations. Now, why is that good? Well, at the end of the day, that means more of AI can be implemented into the economy. It's not just that Disney and Netflix get to move on with their business, is that we finally get the productivity levels that AI is promising because we can implement it into the businesses. So far, those studios have not been able to implement AI because they need to do it with the writers, the strikers, etc. And if the strikers are saying we're just not going to work, then you're not going to be able to implement AI while you don't have any employees to use it. So at some level, this is going to be very bullish for some of these stocks, it doesn't mean the economy is necessarily going to get better, but it does mean we're going to get to more progress when it comes to labor relations and the overall advancement of artificial intelligence. Now, the UAW strike has not come to any significant pause yet. And so let's get a little bit of an update on the UAW strike. What is really being affected right now are not even the big auto companies, but the suppliers of those cars that are starting to feel some of the pain.
About the impact of the strike across the auto sector and really across the economy. Parts makers that supply the big three have more than $38 billion of revenue at risk if these strikes expand. And some parts makers rely on GM, Ford, and Stellantis for as much as 76% of their sales. Glenn Stevens Jr. is executive director of the Michigan Auto at the Detroit Regional Chamber of Commerce. Glenn, we had the big Chamber of Commerce on not too long ago, warning about the ripple effects. I think that's part of the power that the unions are able to wield. So we can warn about how bad it is, but this gives them leverage and adds to their ability to maybe extract higher wages and benefits.
Well, no one argues that the UAW should have a raise and has worked hard for a raise. At the same time, the OEMs, the ones that employ people, they have to compete on a national stage and international stage too. And to pick up on what Phil is saying, we're seeing more ripple effects. Yesterday, a supplier in Detroit laid off 650 people that make seats for the Broncos. And we're seeing this on the west side of Michigan and on the east side.
So these are suppliers laying off people, not the big auto manufacturers. But obviously, if the suppliers depend on the big auto manufacturers, they're going to have layoffs as well. So this is definitely not the best thing in the world for people that have jobs in the industry.
Across all the communities, the suppliers are really feeling the pain right now.
40% is a long way from 20%. You've got some gray hair. I think this isn't your first rodeo. Can you tell me when, how, what it's going to take, how long it's going to take? What's your gut feeling on how this plays out, Glenn?
Well, you're right. I've seen this a few times. We are at a very historic moment because of the things like electrification entering into the paid picture. We didn't have that before. Nobody really knows. We have encouraging news out of Canada with the settlement or a tentative agreement between Unifor and Ford. So that's encouraging. But the fact of the matter is the OEMs have put a very, very substantial offer on the table, and they have to compete. They have to be able to invest in their future.
And unfortunately, the workers are just not coming to the table yet. So as he said, right, the OEMs, nothing has changed too much over the past couple of days other than more strikes happening. They've put out a pretty strong order for the negotiations to at least begin. And the workers are just having none of it. It's really interesting how the workers are going against this. I mean, they're essentially saying it's my way or the highway. And you're supposed to say that in a negotiation, right? It's like, I want 100. Well, we'll give you 70. It's like, I want 100. Well, we'll give you 70. It's like, I want 100. And then like, all right, we'll give you 80. And then you're supposed to come to the table, right? And they're like, nope, we still want 100. And then the big auto guys are like, dude, we went from 70 to 80. They're like, nope. They're like, 85. They're like, nope. And at one point, you're the other party, and you're just like, I don't know what else to do anymore. I don't know how I could. I don't know. I went from 70 to 85, and you're giving me nothing here. And that's basically what's going on right now with the auto workers and the manufacturers. And unfortunately, we're seeing some of those issues take into place with no real progress, unlike the Hollywood strike that's finally starting to see a little bit of progress. We have two headlines I want to get to before we get back into some of the charts right now. Cisco has bought a company for $28 billion. I don't know if this is good for Cisco or not good for Cisco. This looks like an all cash deal. They bought Splunk. Do you guys know this company? Cybersecurity company. $28 billion. They're buying them for $157 per share. Was Splunk a public company? Let me check. Splunk was indeed a public company. So Splunk, if I'm not wrong, Splunk is SPLK is the ticker. Let me check the ticker real quick. SPLK. Let me know if anyone owned this company. Yeah, wow. They're up 20% in the pre-market. So SPLK is at $144 in the pre-market. They're likely going to go to 157 immediately as soon as the market opens. and Cisco's buying them. Now, it's interesting. Cisco tried to buy Datadog for about $7 billion a couple years ago, and they weren't able to close the deal. So now they're paying 4 times what they were going to pay for Datadog, which is, $28 billion for Splunk. Cisco is not a company that is a growth stock. It pays like what's the dividend yield? Like a 3.5% dividend. It's not really the sexiest company, but it has been going up a little bit over the past couple of weeks. Cisco, what's the divvy yield? What is the divvy yield on this? Cisco is 2.81%. I don't know how I feel about this. I mean, 28 billion is a lot of money to spend on this. I guess it's worth it. The market cap for Splunk, SPLK, was 20 billion. So they're paying an $8 billion premium right now on Splunk. Honestly, I don't know much about the companies to be able to comment too well on this. I guess for Cisco, they're trying to get into the cybersecurity space in a broader way, and also trying to get into a little bit more innovation. Obviously, the company is not really an innovation growth tech stock. So I guess that's their reasoning there. But Splunk was a Kathy stock. Does she even own? I don't think she owns any more of this. I don't think she owns too much of this. But obviously, look, congrats to Splunk shareholders. I don't know how to feel about this for Cisco. I don't know. Cisco's down 4% in the pre-markets. Usually when you do an acquisition and you're shilling out that much cash, your stock's going to tank because, the market realizes you have to pay a ton of money. But if the resources they're getting from Splunk are going to add value to Cisco, then we'll see if that happens. I also don't know if regulators have officially approved that deal. So that might be one of the reasons why the stock is not exactly at the price of the acquisition. The other headline we have right now is Rupert Murdoch is stepping down as the head of Fox News Corp. Rupert Murdoch has stepped down as the chairman of Fox News Corp. If anyone has ever looked at the history or you watched a documentary on Rupert Murdoch, this guy's a media mogul. Essentially, he built his wealth with a couple of newspapers back in like the 70s, and then he just kept acquiring more and more and more and more, and ultimately built out Fox into the behemoth that it is today. He is 92 years old. One of his sons will become the sole chairman of News Corp and will continue as Fox Corp's executive chair and CEO. This is interesting. Fox is a public company. If you've looked at their disclosures, they're worth about $4 billion. They have to pay about $800 million, which is almost a quarter of their market cap, to the voting system. I forgot the name of it because of the whole Tucker Carlson thing. So, I mean, that's interesting to see him stepping down. Him stepping down also may signal a little bit of instability for where Fox News is at right now after they lost Tucker and they're trying to find an identity. So I guess we'll see what happens there. He is in succession. Yeah, that is true. People have used him many times. 92 and retiring. He's lazy. People don't retire ever. Yeah, he's deciding to take a little bit of time. Murdoch bought MySpace. Yes, in 2006, I believe he bought MySpace for about $500 million. He ended up buying that company. Okay, so those were those two headlines. We talked about the Murdoch stepping down, and we talked about Cisco. Now, let's go a little bit more deeper. We have this guy. This guy is Neuberger's Steve Eisman, which, if I'm not wrong, he was played in The Big Short. And he has been the one, for those that don't know Steve Eisman, he was one of the guys who called The Big Short and was able to make billions of dollars on getting the subprime mortgage crisis right. He was on CNBC about a month ago saying that this is going to be a stock market that melts up, meaning essentially it's going to be rocky, but it'll go up versus bad. Here's him today talking about the banking sector. When he talks, I tend to listen, obviously because he got 2008 right, but also he's been pretty correct about many recessions and the fact that this year has not been a recession, and he's been on the side that this is a bull year, even though he's been a mega bear most of his life.
Bring in Steve Eisman. He is a senior portfolio manager at Neuberger Berman. And Steve, there's been a lot we've been talking about this morning, just concerns and jitters after the Fed came out with a message that maybe the market's not quite prepared for. If you start thinking through that, okay, rates are going to be higher for longer, we have to figure out what that means. It's coming at a time where oil prices are up again. You've got a number of strikes taking place, wages likely to go up from here. I don't know if I'd call it a spiral, but certainly go up significantly. And Goldman Sachs yesterday coming out and saying they're looking at the biggest profits plunge since the pandemic, just in terms of what to expect from companies' earnings in the first quarter. They're going to be down sharply because margins are going to get squeezed pretty tightly. It's a lot of scary news. You can understand the red arrow.
Now, as she says all that scary news, it's not all that scary, right? A lot of those things will be resolved, I think, in the next couple of weeks, if not the next month or two. So, I mean, that news is there, but I don't think they're necessarily headwinds for the entire market.
It's not that.
What do you
It's
think?
not that scary.
I swear to God, I didn't watch that clip. I swear to God, this clip came out like 5 minutes ago. So, you know how I said it's not that scary? I swear on my life, I did not watch this clip before. I'm going to be the next Steve Eisman.
Okay, talk us through it.
And first of all, I'm sort of amused by people's reactions to the Fed. Every single meeting, the Fed says the rates are going to be longer for higher, and everybody doesn't believe them. And now this time they finally believe them.
Wait,
I mean,
longer for higher. How does that work?
higher for longer.
Oh, okay. All right.
Early. I haven't had
Because
coffee.
people are cautiously optimistic or optimistically
No, they say
cautious.
higher for longer
Higher
every
for
time,
longer.
and everybody says we don't believe you. And finally, after the 15th time they say higher for longer, people say, okay, that's bad.
Okay, maybe they're just hitting reality, which is if it's not higher for longer, it's going to be because a recession is starting to set in and the economy's turned down pretty significantly, and neither of those are great options.
I mean, I don't see it that way. I mean,
Okay.
at this point, everybody's basically been wrong about the economy. You know, people who are negative are positive, people who are positive were negative. There's no, I mean, look, there's an economist I really respect, Ed Hyman. And a few months ago, Ed went negative and said there's a recession coming. And I saw him a week or so ago, and even he admits there's no actual evidence that a recession is coming. He just thinks
I agree as well, man. There is not as much evidence as people think for some cataclysmic recession that's coming. And I think Steve, who's been a perma bear most of his life, is recognizing what this year is turning into and kind of on the right side of understanding where the market's going.
it's coming. So now this
What changed his mind?
Is there a CJ Lawrence still around? Is that
no, he's with Evercore.
Evercore.
I mean, he just thinks rates are going to eventually cause the economy to go into recession.
Like
But people have been saying that for the last year and a half. So look, I'm not an economist. This is a very humbling business. You could be right one day, you could be wrong the next, you could be right and wrong on the same day. You know, at this point, there's no evidence it's a recession is coming at all. Maybe it is, but until when? Everybody should relax.
But do they need a recession to break the back of inflation? If it
I
doesn't,
mean, at this point, it doesn't seem like they do.
so it'll come down.
I mean,
Either
look,
way.
like I said, I'm an economist. I'm totally data driven. You know, at this point, inflation's coming down, the economy is strong, and people are getting hysterical because the Fed says that rates are going to be higher for longer. So I'm not so hysterical.
What do you think when you see the market? You see prices where they are. Do you see bargains in abundance?
I mean,
Do you-
some are starting to develop again. You know, there's been a correction. Maybe there'll be more of a correction.
You call what we've been through a correction at this point?
A little correction.
Yeah, it's pretty modest.
Maybe there'll be.
He is correct. It's a little correction. A correction tends to be 10%. I mean, we're down like maybe 3% from last week. So not a correction yet, but if it turns into a real correction, I think that's where the opportunity will truly be for a lot of the money on the sidelines.
More. You know, tech has had something of a correction. You know, if there's a correction at this point, since I don't see a recession companies, I'm more inclined to say they're buying opportunities and shorting opportunities,
So where do you
except
see-
in the banking sector.
Okay, let's talk buying opportunities, and then we'll get back to the banking sector. Where do you see buying
I
opportunities?
mean, I think there's some infrastructure companies that are coming in. You know, the money that the government is going to be spending has just been a trickle this year. It's really going to come in starting next year. I mean, if you speak to the companies, they'll all say it's really not having any impact on our earnings yet, but a lot of plans are being drawn up. You know, I expect 2024 and 2025 to be massive years for infrastructure type companies.
I know you
it's-
can't talk individual stocks,
Yeah.
but infrastructure at large.
Yes, I mean, aggregates, road building, factory building, automation, eventually someday solar will come back. You know, kind of in that whole area, reshoring, greenification, et cetera.
You like bonds and all? Short, long, muni, corporate?
I don't short anymore. I'm not
Yep.
short bonds. I find.
No, I mean short duration, long duration. What would you buy?
I like relatively short duration.
5 year?
Nothing more than 5 years.
5 year corporates or treasuries or munis? Or
I
what?
like, you know, for some of our clients that have cash, we've bought some, call it 5-year duration corporate bonds,
What quality? Like
high quality.
high quality.
And
What can you get there?
over 5.
Over 5.
But the interesting thing is that you can get over 5 just for buying a 3-month treasury. And even in our money market
But then
fund,
3
you can
months
get
from
over
now,
5
you
months.
might not
But
get
it might not. So
Yeah.
you're taking risks there. But, you know, a combination of the two is if for in a client's account or some variation thereof at this point, for those who have cash, I think is a good thing to sit and wait in that stuff.
The very thing that makes you positive about some of these infrastructure plays, the idea that a lot more government spending is going to really kick in, could.
All right, so Steve Eisman shares the same thoughts that I'm having. We're 6 minutes from the market open. This has been one of the most exciting market opens that we're going to have all month and really all year, because this is the first day we are seeing serious red develop. I mean, this is the first day in a while we're seeing really, really hardcore red. Remember, from January to June, we were kind of tracking upwards, and we were going, or January to July, we were going from 360 on the S&P, making our way up to 460. And then we've had this correction down from 460, mini correction, S&P at 438. But we haven't had like a violent, I mean, August, we had some red days, but today feels a little bit different in terms of how violent it is, especially after the Fed kind of said we're not going to raise rates, but the market kind of doesn't believe that they're ever going to cut rates anytime soon. And that's why this higher for longer thing is triggering a bit of a decline. One of the interesting things that Steve said is that you can be humbled in this business in the same day, right? You can be right on one day, wrong the next day, right or wrong on the same day. For a guy who's been a bear most of his life, for him to think this is not the market that is going to be the recession that everyone expects it to be. I mean, usually what tends to happen is everyone's expecting one thing at one time, and it just doesn't go that way. I think Steve is taking the contrarian, which I don't even know is contrarian take at this point, which is that there's not enough catalysts for us to see a horrible recession. You have to have unemployment going berserk. You have to have yields on bonds going crazy. And I know they're crazy, but you gotta see them being even crazier for that money to not take a risk on companies like SoFi, Palantir, Tesla, right, Robinhood. Like, there are companies that are very attractive for what they're being able to do. And you have to see Q3 earnings fall off a cliff. Remember, the one catalyst that's also saving a lot of the earnings, which has supported the market and given the S&P the premium on the multiple, is AI. Whether we like it or not, the market loves AI. The market loves the growth trajectory that's going to happen as a result of AI. And we're seeing it in our day-to-day lives every day. I cannot tell you how many examples I'm seeing of me being more productive every day doing something that used to take 5 hours in quite literally 5 minutes because of artificial intelligence. That being scaled to the enterprise is going to have effects on earnings. This is not some hypothetical, like little thesis that someone has. This is, we're going to see it in bottom line numbers and overall growth. And when we see that, you're going to have to ask yourself, do you want to be getting 5% on a 2-year, or do you want to be investing in some of the most innovative companies in the world? And then on top of that, the cherry on top is inflation is coming down. And the Fed confirmed that yesterday. Steve Eisman basically talked about the fact that if inflation is coming down, you don't need a massive recession to crack inflation. This is not the 1980s where inflation is so bad that you need this horrible recession to crack it. It's coming down, and it's coming down pretty nicely. And so I don't think this is a red day to be really scared about. I think this is more of an opportunistic red day, but obviously the red can last for a lot longer given it's a Thursday, tomorrow's a Friday, and we might see a little bit more red going into next week. Amid, if rates keep going up, unemployment follows. Yeah, but rates aren't going up yet. Remember, rates are paused. And there's a 50-50 chance it goes up in November. If we get 2 good CPI reports over the next couple months, then, which is October, November, then I don't think the Fed raises rates, man. I think the Fed knows that they're done with tightening this cycle. I really do. And as a result of that, now granted, if CPI explodes in October, November, all bets are off the table. But if we're right on kind of this whole argument about the Fed has a bad methodology, we should see rates not come down, but at least pause for a bit. Some of you think rates are still going up. Yeah, I'm on the side that rates are not going up personally, but one of us are going to be right. Either it's going to go up or it's not going to go up. Amid, I'm from the UK, and after 14 consecutive rate hikes, we have finally paused. Thank you, Benny, for this comment. I actually forgot to mention it today. There was a pause. I tweeted it this morning from the UK. We had so much problems going on in the American stock market. I forgot to bring up that news, which is also bullish, right? I mean, the UK finally thinks that inflation is coming under control. So as a result of that, they've decided to pause interest rates after 14 consecutive hikes. And it's the same thing with the Fed, right? The Fed hasn't done 14 consecutive hikes, but the Fed knew that, look, it's getting pretty tough, right? Like 5.5, 5.25 is a pretty appropriate rate for a real rate. And nominal real rates are actually, I think, above 3%. So interest rates are here. Mortgages are at 8%, right? We have definitely got an economy with high rates. Now we just have to wait to let it play out and see what goes from there. We've got 40 seconds until the market opens. 9:30 a.m. Eastern is going to be violent, in my opinion. This is going to be one of the more violent days we've seen. I'm already down $9,000 this week because, it happens. You'll be up a lot of money. You'll be down a lot of money. Obviously, it's on paper, but it is what it is. I've seen being up 30,000 in a day this year. I've seen being down 9,000 in a day in a week this year. Like, this year has been kind of crazy. Overall, it's been a good year, and I think it'll be a good end to the year. But today is one of those days where it sucks. And one thing I did say before we get into the market open, we got about 20 seconds. I'm happy that everyone is here. Thank you all for being here. Sometimes it's nice to experience this with a community. I know the red sucks. Nothing makes it feel better. But if you're with a community with people and you kind of are in a group and you're all dealing with it together and the long term that it's going to be okay, sometimes a little bit more manageable. All right, here we go. September 21st, 9:30 a.m. Thank you for being here. The stock market is now open. Wake your ass up, but you might want to stay a little bit asleep given some of the numbers we are going to get to. S&P 500, 435, down 0.67%. So S&P, nice big red candle, not too bad. It's down 3 points. It could be down worse. So we got 435 on the S&P. SoFi, $8.09. We're going to be tracking SoFi over the next 30 minutes and see if it falls below $8. Palantir Technologies, $14.32, down about 3%. It was down yesterday in the 1470s after Jerome Powell speaks, so it's down about 3 more percent. Today, NVIDIA, 417. We are officially below 420 on NVIDIA. Robinhood below $10, $9.99 on Robinhood. Let's see if that rebounds back to 10 or if that keeps going a little bit lower on Robinhood. KRE, Regional Banking Fund. Obviously, the regional banks are not going to be in a good situation today because the market is scared about rates are going to be higher for longer. Rates being higher for longer really does not help banks. So as a result of that, you're going to see the banks not be in the best situation. We see KRE down at $41. Key Group or Key Corp is down 1%. Zion's is down 1.2%. TFC down 0.21% as well. Enphase is green in a sea of red, and that is leading me to believe that the reason Enphase is green in a sea of red is because management is doing some buybacks. I think that is happening today. Management is doing some buybacks. While I'm going through the stocks, I just got an idea. Imnop says she is down 7.6K. Everyone comment how much you're down. This is part of the thing about being here with a community. Sometimes it's just better to kind of let it all out and vent. I'll go first. For the week, I'm down. Oh, I thought it was down 9,000. For the week, I'm down 6,000. Not 9,000, 6,000. So I'm down 6,000 for the week. Let us know how much you're down either for the day or for the week. Just put a dash, the number, and then week or day, and then I'll read them out for everybody. Enphase at 124. I think management is buying some shares. It's very weird that it's green today, but it is green. Meta at 298. They are down. Google 132. This is down. Apple at 175. This is down. Microsoft 319. It's red. Amazon 131. It's red. Disney 81.94. It's red. If you're just tuning in, the breaking news this morning was that the actors and the actors union has come to a negotiation or come very close to high-level negotiations with top executives from Disney and Netflix, and we are likely going to see some type of deal within the next couple of days, if not tomorrow. Rocket Labs, $4.30, down 3%. PayPal, $60. PayPal was at 65. I think PayPal will be fine, but as of now, it's going to be red. $60.24, down 1%. ARM, $52. It's up $1 from the IPO price. GM, 33. Tesla, $259. Tesla was almost $280 this week on Monday, $259. Obviously, we're going to see a decline on Tesla. It is one of those high-growth companies. Q3 earnings probably going to be tough with some of those margins, but Tesla right now down at $259. Ford is down a little bit at $12. Roblox is down at $25. ARK Innovation, wow. Kathy's ARK falling below $40 at $39.98. It makes sense. A lot of her stocks are probably down today. If we check out Roku, Roku is down 1% at $70. Zoom, this is another top holding for her. That is down 0.67% at $68 as well. AMD below $100. I know a lot of people were looking at AMD below 100. AMD right now at 98. SMCI 235. Snowflake 154. Walmart 164. We got Walmart that's green, which makes sense, more of a blue chip stock. And then Target, I'd argue, is probably blue. Target's basically flat, down 0.34% at $120. S&P still at 435. Let's check on the Nasdaq. Nasdaq opens up at what? 13,329. Ouch. Down 137 points. Nasdaq. It was at 14,149 on September 1st, 13,320 on September 21st. S&P 500 as well, if we look at the 1 month, was around 450. Yeah, 452. 450 on September 1st, now at 435. So let's calculate that. So we were at 452 on September 1st. So 452 minus 435 divided by 452 We are down 3.8% for the month. 3.8% for the month. That is the correction we are having month to date on the S&P 500. And then Palantir at 1452. Palantir rebounding a little bit. Palantir was at 1430. Palantir now at 1450, down about 1.6% on the day. All right, let's read out how much people are down. We got a lot of these. Here we go. We got Utah down 5K. Tesla Palantir down 8.6K. Technical Trader Wrong down 1K. Don Juan down 5K. Tom Brady down 4K. Tom Brady got 4 rings, but he's down 4K. Invest Engineer down 4K. Joseph down 4,500. Justin Cookin is down 20K for the day. Your portfolio is not cooking, my guy. I'm sorry for that. Matt R down 10K for the week. Jared 1K. Doll hairs this week. Sanjay down 5K. Ray down 7K. Edmund, I'm down 70K this week and down 16K today. Okay, Edmund has a lot of money because that 70K for the week is that means when the market rebounds, you're definitely gonna have some nice numbers on your screen. Brian's down 3,500 for the week. Zach's down 2.7K. Troy's down 500. Simple Investors down 4K for the week. Kimberly's down 3K. All right, we're down. It's a red market. You can't always be up. The one thing I like to say on the red days is don't feel bad that that you're down, because I know so many times people psychologically get into this trap of like literally blaming themselves and thinking they're the worst person in the world and saying they're an idiot and all this like negative, toxic, self-deprecating talk to yourself just because a stock goes down. It's important to remember there are very large institutional investors that are down billions of dollars just today because they bought a stock a couple of dollars higher than it is today. I mean, Bill Ackman's probably down already on his Google position from the latest buys he had but he's in the long term for Google, so he doesn't really care, right? But he's probably down at the scale he's at a couple $100 million today, or like $40-50 million today. So it is what it is. It happens. And as long as these stocks come back, which if you pick the right stocks, they should come back. If you pick shitty companies, it's tough, right? But if you pick the right companies and you have a long enough time frame, things will be okay. It's important to not feel horrible on today. Things happen, and eventually, the market comes back. And of course, Erwin just made $300 off a NVGO put. So there you go. You can also get some downside momentum if you play the market correctly and get a little bit of momentum there. All right, let's get into some analysis on what's going on where with the macro is going. I want to play one of these clips from JP Morgan and hear what they think about the Fed. So here's JP Morgan's, one of their top analysts, talking about where they think the Fed is going, what they think is done with the hiking cycle, and how they think money or how they think money market funds are going to perform. Oh, it's actually AVGO. So the reason Erwin got an AVGO put is because Google announced that they're likely not going to be using them as their supplier for chips anymore, which means Google is bringing it in-house, which is bullish for Google, not bullish for AVGO, which I think is Broadcom. That's the name of the company. And as a result of that, that's why Erwin got it on a put. All right, let's take a look.
Delivered a hawkish pause. Widely said, and you point that out. Priya Misra is with us this morning. You think that the central bank at this point is actually done hiking, but because of a slowdown that's in the cards that might be, this is a lag effect that we've talked about, your JP Morgan assets. Yeah.
So I think the Fed doesn't know. I think they're trying to extrapolate from the recent strength in the consumer spending data that we've seen. I think they're hoping that they get this soft landing. I mean, you look at their forecast for next year, they've got the economy barely landing. I mean, I would say it's a soft landing or it's a no landing scenario. So I think that's what the Fed hopes, which is why I think it was a very hawkish message, actually. So they didn't hike, but what they did was they actually signaled a more positive real rate next year, because if inflation declines as they project, they're telling us that they're not going to cut rates next year. So the market, that's why the rates market reacted. I think it was a hawkish message. I do struggle with this higher for longer, with the fact that the economy is slowing. There are some clear signs of slowdown, which is why we think that this was that July was the last rate hike. But I think the Fed's forecast, that's sort of, I would argue, somewhat fanciful.
I
remember, if the economy is slowing down, the Fed is not going to raise rates because they don't want to, collapse the economy. If the economy is slowing down, theoretically, you should be cutting rates to stimulate the economy. But the reason the market's upset is because if the economy is slowing down and the Fed's not going to cut all of next year, then we're just like, well, what's going on here, right? When are we going to actually have that cut?
I think there may be more of a lag effect, and the damage is going to become more apparent maybe more quickly than the Fed may be anticipating. I think there are serious crunches to the economy, whether that be in lending, being able to borrow, and for consumers at the bottom rungs, being able to pay off your credit card, being able to find housing that's not prohibitively expensive. You know, it's terrible when your groceries are expensive, when your gas is expensive, when it's your mortgage or your rent payment. I mean, that is the biggest chunk of you might be able to keep up with inflation. You complain about it, but you can keep up with some of these things, not when it's the biggest bill that you're paying every month.
Exactly. And I think that just takes a while because majority of Americans have locked in their mortgage. It just takes a while for people who have to move. Then they have to start, to pay that 7.5% mortgage rate. I would also argue that the COVID savings that we had, I think that cushioned a lot of the blow to consumers. That, in our estimate, in the fourth quarter is likely to run off. I think it's already run off for the lowest rung of households, but I think it's going to come out on aggregate. So I think interest rates just take a while to play out, and the Fed is trying to buy time. But I think, their idea that we can get inflation all the way back to 2% without a slowdown in the economy, without a rise in the unemployment rate. And I would also look at the labor
they would say
market.
they expect a slowdown in the economy and a rise in the unemployment rate, but maybe not as much
increase.
as going
Exactly.
to happen.
Yeah, I think their forecast for NAIRU or equilibrium unemployment rate is 4%. They're forecasting 4.1. That's essentially full employment. So I think, our view is that the economy is already starting to slow. You look at the labor market, that deceleration, it's been gradual. But I think as that tends to, continue to decline, the 3-month run rate for payrolls running at 150,000, as that gets to 100,000, below 100,000, I think the consumer's ability, where the savings have already run out, their ability to keep spending is going to go down. Plus, you've got all the
I mean, look, she's right about that on top of the fact that you've got student loans coming up. So there's going to be other catalysts as well for the market or for the consumer to have a little bit more pressure. The question becomes, is that going to indicate itself onto earnings in terms of a consumer that can't spend on the kind of core basic things we need on the on the products and goods and services we love, like Amazon? Are they going to feel pressure from the consumer? Is Google going to feel pressure from the consumer? S&P 500 at 435, down 0.78%, not down as badly as we think. As the analyst was just saying on CNBC, it's a tough situation because if the Fed goes higher for longer and doesn't raise rates or cut rates, it's kind of hawkish because you're looking at this economy that doesn't have any understanding of whether we're going up or down, just an understanding of the fact that things maybe aren't the best. On top of that, you've got unemployment potentially creaking forward, and that would be a reason to cut rates if unemployment explodes to 5%. Right now it's at 3.8. The Fed doesn't think it's going above 4% by the end of 2023. If we go above 4% on unemployment by the end of 2023, I think a cut is going to happen way sooner. But this is kind of the paradox. If a cut happens, that means something's cracking in the economy, right? Unless inflation comes down normally. Either the Fed is going to have to trigger a recession to get inflation to crack, which I don't think is going to happen because inflation should come down normally based on all the things we've looked at, or something's going to happen where, whether it's a credit event, unemployment, bad consumer, whatever it is, that hurts earnings and the Fed has to cut to stimulate the economy, which means the market's already going to have to collapse to some level, some type of correction in order to get earnings to go higher. Or not earnings to go higher, but in general for the market to have relief, because there's going to have to be some type of stimulus. On top of that, S&P now at 434, so we fell another point from 435, 434.77. SoFi at 802. The Fed is still doing quantitative tightening. It's not like the Fed stopped quantitative tightening. They are still doing restrictive monetary policy in regards to quantitative tightening and not raising rates, but keeping this higher for longer thing. So all in all of the Fed's policies are a little bit more restrictive, nothing being as dovish as we think it could happen. Amit, would you recommend taking out a SoFi loan to buy SoFi shares? Okay, so someone asked this question like 20 minutes ago. No, nobody, please, for the love of God, in the chat, take out a loan or go on margin to buy shares, because it takes one bad trade for shit to collapse. One bad trade. You might think, for example, Robinhood, that I believe is very undervalued at $9.88 is a steal, and you take out $20,000 loan and buy a shit ton of Robinhood. Next thing you know, it's at $8 because the market's just really bad, and it happens, right? You just don't know. And if the big billionaire Wall Street guys can't predict these things correctly, there's no way we can predict them as correctly as them. And so if you don't spend your entire waking day focusing on the markets, I would not recommend taking out margin or loans to be able to buy shares, because if you have to pay it back and you don't have the money to, and they have to call on your shares, it's just a tough situation to be in. So I wouldn't do that. SoFi right now, speaking of SoFi, 1 cent away from being below $8. Let's see if we get there. You see it's teetering on $8 and 8 and 1 cent. We'll see if it gets down to that 798 range. S&P 500 434, Nvidia 416, falling from 417. Pound. Wow, look at that red candle on Palantir. Look at that. 1390. It was just at 1450. We were just at 1450. Wow. I was thinking of putting in an order at 1430, and I had a feeling it was coming a little. Okay, so 13 is where I wanted to buy. So let's see. I mean, if it's pretty bad. Today's bad. Yep, it fell. We are definitely seeing some red right now. My portfolio just took a massive dump. There it is. There's the red. I think that's the red. Now, let's see how bad it gets, right? Do we get to 1360, 1370? Does it actually go there? Look at that. Someone just dumped a lot of shares. That big red candle, it was either retail who had enough of this, or it was some institutional investor that was like, nope, I'm done. One thing that would be interesting to see is if Cathie Wood ends up buying any shares today. We know she's going to go shopping. The question is, what shopping is she going to be able to end up going for? Speaking of Cathie Wood, she did buy some shares yesterday of a company. Let me share my screen and show it, and then we'll check on the stock price of that company. Palantir also had a press release today. I'll talk about that in a little second. Cathie Wood purchased 2.1 million shares of DNA, Ginkgo Bioworks. This was a big buy. 2.1 million shares is a lot of shares. So let's look at this real quick. And she bought 740,000 yesterday. So right here in the ARK-G fund, she buys 439,000. And in the ARK-KK flagship fund, 1.7 million shares. Either she's right about this. She also bought 405,000 shares of Roblox. She sold 270,000 shares of DraftKings. I think she's up on that position, and sold 32,000 of Tesla just for portfolio bouncing. Bought 225,000 of Teladoc. Either she's right on Ginkgo or she's wrong on Ginkgo, but she's buying Ginkgo like it's going to be her next Tesla. At some point, I think she's going to own almost like 10% of the company the way she keeps buying shares. I think Ginkgo has 2 billion shares outstanding. So if she gets 200 million, she's going to have close to 10%. $1.75 right now on Ginkgo, down another 5% today. As you can see, the entire market is red. Truist, for some reason, is green. You would think Truist, that's really interesting that Truist is green, because all the regionals are red. That's actually very surprising that Truist is green in the heap of all this red. And I think it's because the low on Truist is like 26, 27. And so when it gets to those levels, the market tends to just buy it up, right? When it gets to those 11-year lows. So that might be happening right now. AMC is green at 821. Disney is green at 83 at 113. What other green do we have? Paramount is green, 1359. Netflix is green at 393. And the reason Netflix, Disney are green is because the strikers are likely going to come to an agreement in the next couple of days. Macy's is green, up 1%. Marvel is 0.83%. It's up. That's another semiconductor play. And then CVS is green. The rest is all red, nothing but red today. Palantir at $13.88. Red on the day. It's a red day, folks. It is absolutely a red day. Red day. Crossroads, Palantir racing down harder than most today for some reason. Yeah, I think a whale just dumped. I mean, the red candle, the way it popped up is like, it was pretty rad. Okay. So cool. So that is that. Sorry, just had to text one person. Okay, cool. Enovix is barely green. Palantir, FEM is green. Just a red morning. Yep, it's just a red morning as well. All right, let's take a look into some other stuff going on in the headlines. If you just joined, Cisco has acquired a company for $28 billion in cash, which is Splunk, cybersecurity play. Rupert Murdoch has stepped down as the chairman of Fox and News Corp. The Disney, Netflix studios are getting more likely to come to a deal with the unions that are on strike. And in general, the auto worker striker union is continuing to do their strikes, and layoffs are happening at some of the suppliers because they are not being able to keep up with the demand from the big three manufacturers, GM, Ford, and Stellantis. So we're seeing a lot of red and not too many catalysts to help for that red. And on top of that, and let me pull up this chart right here, the 10-year bond is reaching levels that it was at back in 2007, and the 2-year bond is reaching levels that it was back at 2-year where was it at 2006. So let's take a look at this right here. 10-year 4.48%, up 0.133%. If we go to the all time, the last time the 10-year was at this level, as you can see right here, you guys should be able to see this as I zoom in. Can you see this? Yes, you should be able to see this. 2006, 2000, yeah, right about here. 2007 July. That's where we were at this level, around 4.482. So the market is pricing these 10-year treasury bonds similar to 2007. Obviously, we know what happened in 2008. That doesn't mean it's likely going to happen again. It just means that the market is scared right now about the state of the economy, which is why they're giving bonds these yields. And then if we look at the 2-year, which is as high as it was back in 2006, that is also, I mean, if you want one reason for why the market's down, it's treasury bonds. The reason the market is down today is because treasury bonds are giving deals that we have not seen in literally over a decade. The 2-year as well, 2006, around this time, April 2006, 5.16. That's where we were at right now. Today, we're at 5.15. And that's why the market is also a little scared right now, given what we're seeing. So, it is what it is. I don't think bond yields are going to last this long, quite frankly. I think a lot of today is a head fake. I think this is not a dip that lasts forever. I think this is a dip that is an opportunity. I think it will be bought up. I think we're going to see a little bit of a bounce. I don't know when that's going to happen. The other catalyst that we haven't talked about is the government shutdown. Look, I think the Republicans and Democrats will come to some agreement to avoid it. But if it doesn't happen, then there's going to be some more volatility. I mean, that's just naturally going to happen if we don't deal with the government shutdown. A little bit more of a bullish look on why inflation is coming down and why some banks expect the inflation narrative that is permeating to be a false narrative around how the Fed is interpreting it.
To talk rates and the latest Fed decision is Campbell Harvey. He is a professor of finance at Duke University. He also coined the inverted yield curve indicator in a 1986 thesis. And Professor, thanks for being.
Oh, wow. This guy's important. This guy figured out the inverted yield thesis. So the inverted yield thesis is that when the yields invert, there's going to be a recession. So this is the guy, you're looking at him. He's the guy who came up with that argument. That's pretty cool.
Here today. Let's talk a little bit about the inverted yield curve, because it's gotten a lot of pressure from people saying, hey, it's wrong. It's been indicating recession for a long time. You think they're misreading that indicator. What's it telling you right now? What do you see?
So the indicator is 8 out of 8 in predicting recessions, and it doesn't have any false signals. So one thing is the lead time from the inversion to the beginning of a recession. And if we look at the last 4 recessions, the average lead time is 13 months. So it's way too early to say this is a false signal. Maybe it does turn out to be a false signal, but you can't say it's a false signal when you're not even at the average. So at the average, we would expect a downturn to start in December or January.
December of this year or January of next year?
Correct.
Because it takes 12 to 13 months before it's going to kick in anyway. And that's about
exactly.
Where we're hitting.
And people also say, well, we've seen the yield curve inversion become less of an inversion. So kind of a re-steepening. Well, the last 4 recessions, that happened before the recession. So it doesn't mean that it's a false signal necessarily.
You think a recession is coming?
Yes. So I think that the Fed has made a major mistake. What they should have done yesterday is not just pause, but say, this is it. And indeed, it would have been ideal for them to say, well, this is it. And now the next decision is to decrease the rates, not to increase the rates. And unfortunately, there's a false narrative going on by the Fed that inflation is well above its comfort level. And it doesn't make any sense to me. And let me tell you why. The most important component, the biggest share in terms of contributor to the CPI, which is running at 3.7%, is shelter. And shelter in the calculation is running at 7.3%. And that is far away from the sort of shelter inflation in the real world in real time, where housing prices are flat or negative, Rental costs, if you look at various surveys, those are flat or negative. So if you replace that 7.3% in the CPI with a more realistic number, like 1%, which is what we observed today, 0 or 1, then the inflation is not 3.7%, it is 1.5%.
That's a big deal, bro. And we've been talking about that here on the Market Open the past couple of days. Like, that is a big deal. Remember, the Fed every 6 months recalibrates their survey for mortgages and rents. It's about to hit that 6-month target again where they have to recalibrate. And when that happens, it's not going to be the level of inflation they expect it was 6 months ago.
And if you believe shelter inflation may be a little higher, like 2%, then the inflation rate is not 3.7%, it's 1.8%. The point I'm making is this quote unquote long way to go that we hear from the chairman, that doesn't make any sense. And I'm not talking about a special inflation gauge where you trim certain things or you throw food and energy. I'm looking at the basic inflation calculation, but replacing one very stale component with real-time, realistic numbers, and we're below 2 right now.
So you think inflation is not nearly as bad as the metrics that the Fed is watching. You think an economic recession is much closer than other numbers might suggest, or numbers that the Fed might be watching. You're a respected professor, Harvey. You're a very respected professor, Harvey. Why don't you think there's more of a traction with that picking up? Why don't you think that message is getting related more often?
People want to believe that we can avoid a recession. I actually hope we can avoid a recession. Like, nobody wants a recession. But if you look at the fundamentals in the economy, so 2023 looks pretty good for GDP growth. But if you look into the numbers, it's driven by the consumer. The consumer bailed us out in 2023, and that's a result of a lot of savings that were built up during COVID and some government help. But those savings have been driven down and are likely to go close to zero by the end of the fourth quarter. So consumption is not going to bail us out in 2024. The other important component, investment, well, that's already negative. So in 2023, investment spending, the growth rate is negative. It's almost like we're in an investment recession already. So you put those two things together for 2024, and it spells very low or negative growth. Hopefully, a soft landing.
How deep of a recession? Yeah, how deep of a recession
so
do
that's the
you
thing.
think one is coming?
The question is how deep? And every time that the Fed increases rates, it increases the probability of a hard landing. And we all want to avoid the hard landing. And it is possible to do that. And I wish that they would look at the data to understand the actual CPI and realize that in the future, that 7.3% is rapidly going to come down.
I like this guy. They need to get this guy on more often. I mean, and it's not because he's bullish in terms of, obviously he thinks a recession is coming. It's more so along the lines of the fact that he's making the argument in very clear terms around how the Fed has created a methodology to be able to understand inflation, and why them being hawkish yesterday is ridiculous if they know inflation is coming off a cliff. Now, to give Jay Powell some credit, he does not want to create euphoria in the market and massive enthusiasm on the off chance that inflation goes up. The problem is, again, if that shelter goes from 7.5% to 1.5% and you get inflation down 100 basis points, like, that's a pretty significant decline in inflation just off the fact that the Fed has not had a good methodology to target or to understand how bad inflation is. And as a result of that, you're likely to see inflation come down a lot more, but the Fed just doesn't be able to do stuff. Just doesn't have the ability to actually do tracking methodologies in the way that a company like Trueflation does. And as a result of that, you end up having this like really crappy Fed that doesn't do it the right way. Oh, wow. Look at this. Alex Karp is going to be on CNBC in a short time. I did not know that. I actually have YouTube TV now, so I can watch Alex Karp on CNBC. I can actually get that in real time. Cool. So we'll look out for that. It's probably going to be in a little bit. Palantir right now, 1388. I did buy 10 Palantir shares. So I just bought 10 Palantir shares during that video. My average cost at 1391 on those shares. So I bought the dip on Palantir, 10 shares, not a lot of money to a lot of people. Significant to me, 10 more shares helps me reduce my average, but Palantir at 10 shares, 13.90, I bought the dip. Look, under 14 is where I wanted it, so I'm happy I waited below to get it below 14. I think if you want below 13, it's a little bit greedy, quite frankly. It's not like it can't happen, but it's a little bit greedy to want below 13. It could definitely happen. It might even happen today, but I think 13 is not the worst price if you're thinking into it. Again, if you would DCA though, just don't go all the way. Like I have some more cash at DCA, but I'm not doing it all right now because obviously it can go lower. It can go to 1350 to 1360. The market can be crazy today, and then there could be better reasons to buy. Truist is still confusing me. I don't understand why it's green right now. I really don't get it. I do not understand. Karp's on CNBC now. Oh, holy crap! Hold on. Let me pull up YouTube TV. Hold on. Yo, this is why YouTube TV is legit, bro. This is why I knew it was worth getting this subscription. All right, here we go. If he's on CNBC now, he's on CNBC. All right, so it's loaded up on my end. I'll let you guys know when I see him. How do I turn the volume? Yeah, there's the volume. Okay. All right. So when he comes on, I'll share it. When he comes on, I will share it. Let me go back to the market. When he comes on, I'll share it. What was I just saying? Oh yeah, TFC. I have no idea why it's green. Really no idea. This one's confusing. I know they said they're going to lay off a ton of people and have cuts, but this one's confusing. I don't know why TFC is green out of all. I mean, I would again, it's close to 11-year lows, so I guess the market's buying it up, but I would expect it to be red on a day like this. Robinhood recovering a little bit. It was at 985. SoFi did not fall below 7 or 8 today. Or maybe it did and I didn't catch it. Right now, SoFi is at a $7.62 billion market cap. Just incredible. SoFi right now at $8.03. 10 a.m. Eastern. Okay. So all right, here we go. I'm sharing CNBC. Let's see Karp show up. Here we go. Let's see if he shows up.
David Faber, live for you as always from Post 9 of the New York Stock Exchange. Take a look at stocks, more Fed indigestion. The S&P is down a full percent. The NASDAQ is down 1.4%, and Dow's given up about 200 points. You've got every sector right now in the red. It's being led lower by consumer discretionary, materials, real estate, and technology. Energy faring the best, almost flat on the session. We're 30 minutes here into trading. Here's some big movers we're watching. Deal of the day, Cisco Systems buying Splunk in a deal worth $28 billion. More on what that means for both companies, investors, and the rest of technology later this hour. KB Home under pressure on the back of its latest results, beating estimates, but the number of homes delivered and average selling price both fell in the quarter. And then there's FedEx rallying today, the company raising its full year forecast after cost-cutting measures helped offset, quote, ongoing demand weakness. More on that story in a moment as well.
Getting LEI in existing now. Let's get back to Rick Santelli on a busy morning for data. Hey, Rick.
Absolutely. Thank you, Carl. Leading economic indicators for the month of August, down 0.4, down 0.4%. That is the 17th consecutive negative month-over-month change.
Okay, so he's not there yet. I'm assuming he's going to be there soon. We'll go back into our charts, and I'll let you guys know. He should be on soon. So Alex Karp, 10 a.m. CNBC. I believe I'm on the correct one. Squawk on the street. Yeah, that should be the correct one if I've got this right. So he should be there soon. They're probably just doing a quick little update. And then he should be there. Yeah, this is the right one. Okay, so we'll see. He should be on in a little bit. And then we'll keep going from there. All right, so yeah, looking a little bit more further into the market, S&P at 434.16, so now down an official 4.5 points, 1% on the day. Nvidia 414, Palantir at 1390, it hit 1370 for a little bit, now at 1390. Robinhood at 984. Key Corp down to 1070. DNA $1.77, down 3%. We might see Kathy buy some more of that today. Nasdaq 13,281, down almost 200 points for the day. Roku at 71. QQQ 359. This was closer to 369 yesterday. So we're seeing that below. Inventory of unsold existing homes is 1.1 million, which is down month over month. That means that there are less homes available for sale, which we knew that was going to happen because we're having a little bit of a housing supply problem. So That is coming in, and that's probably factoring in a little bit as well when we think about inflation. Enphase 123, only down 0.43% on a red day. So Enphase holding up pretty strong. Meta's down 2%. Google 131. I think Google, one of the larger undervalued mega cap tech stocks, also feeling some pain today as the market sends it forward down. And Apple at 174. Apple, even the increased iPhone 15 demand is not enough to keep it afloat on a rather red day. The existing home median price right now is at $407,000, up 4%. That's the data that just came out in the month of August. So if you want to buy a new home, it's going to cost you on average $407,000 in the United States, which is obviously a bit higher than what people were paying last year. And so we're seeing a little bit more inflation there. Bitcoin at 26,456. So Bitcoin also down today from the I think it was at 26,000 yesterday, but down definitely from 27,500 the other day. Amazon 131 and PayPal. Look at that. PayPal below 60. There you go. PayPal at $59. We officially have PayPal below $60. And then what else do you have? ARM at $51. ARM is officially down 4%. It's down about 35% from that $65 range. Now at $51 during IPO range. And then Instacart is $30. So Instacart is green. It's a little bit below their IPO price, but it's green, $30.63 on Instacart. And where's Palantir? Let's check on that one more time. Palantir, $13.90. Palantir, $13.90. Let me share the new press release that came out with Palantir today. We're still waiting for Karp on CNBC. If anyone has any updates on that, let me know. I'm on CNBC on my TV app, but I don't see Karp there yet. Maybe it's going to be at 10:30. I don't know for sure. So let me know. Let me share one thing. I want to share the new Palantir deal because they did come out with a press release today. And then we'll go from there. Let's go to that one. That's about my first 100 shares of Palantir. I'll buy 100 shares for every 2% drop from here. This is my first entry into Palantir. Congrats. First 100 shares into Palantir. Not bad. I don't think this is the worst price. It could go lower, but given where we're at and given how the company's changed over the past year, I don't think this is the worst price in the world. Okay, so here is the press release from Palantir. Kaz Investments in Texas has partnered with Palantir for AIP. Kaz Investments from Texas has partnered with Palantir for AIP. So let's read a little bit of this. Kaz, a Houston-based investment manager, and Palantir Technologies, a leading builder to operating systems for the modern enterprise, today announced a 5-year partnership for Palantir to provide its AIP platform in support of Kaz. Palantir will provide Kaz with AI-powered solutions to accelerate partner onboarding and augment investment managers' work with generative AI. The use of Palantir software aims to help Kaz automatically scale operations and meet growing demand. So AIP will offer Kaz executives the next best action system to identify and recommend opportunities or content to improve retention and service to his partners. It's a typical AIP partnership. The question is Palantir making any money off of this? I'd argue they're probably not. They're selling most likely Foundry to ontologize Kaz's data, but giving them AIP for free. Agreeing to a 5-year partnership. A 5-year partnership is different from a 5-year contract with revenue, and they're probably going to, in the next 6 to 12 months, upgrade this to an actual contract on their books. But for now, they're getting them into the ecosystem. Couple of quotes. One of the quotes from Daniel Wheeler, head of financial services at Palantir. Kaz is embarking on a remarkably ambitious AI transformation that will put exceptional demands on AIP. Those are the partners we're looking for. We are proud to deploy AIP at Kaz. And then the founder at Kaz says, the last few years have marked unprecedented growth for Kaz and a dramatic increase in demand for access to our curated opportunities. We are excited to partner with a talented team at Palantir to ensure that we are able to scale our business for exponential growth, harnessing the power of AI to transform our processes. Typical deal, nothing too crazy, nothing too exciting, but it lets you know another use case for Palantir and Palantir software with an investment firm that is likely seeing an uptick in growth, an uptick in client demand, uptick in assets under management, and so they're utilizing AIP to be able to get a little bit more data. Palantir's at 14. Wow, look at that. Look at that. Palantir at 14. That is interesting. Again, this is kind of what I was thinking early in the morning. And I know, I can be wrong one minute, wrong the other minute. We're all talking back and forth. It's kind of hard on a day where stocks are moving quickly. But I get Palantir at 12, the market at 420. It's possible, but I don't think today is a cataclysmic dip. I think today's an opportunistic dip. It's not an opportunistic dip where you deploy everything, but it's definitely a day where if you're interested in something and you see a price that's down 5%, 7%, you definitely nibble a little bit, right? And so it makes sense. Palantir, that's a hefty rebound. Either that was Kathy buying a crap ton of shares and getting in at $13, or that was some other institutional investors pushing it from $13.90 to $14.08. I don't know if retail had the ability to move it up 20 cents that quickly, maybe. But we did see a little bit of a dip buy there on Palantir. Okay, I don't see Karp on CNBC. I don't know if it's actually happening. I want to know if anyone can confirm that. Sachin said that, and Sachin is a good source. I'm assuming he saw it somewhere, but he might just be coming on CNBC later, and maybe not right now. So we don't see Karp on CNBC yet. Let's transition to CNBC a little bit. Let's see a look at what they're doing, and then we'll keep going from there. Bush Cream says that was me buying. Thank you, Bush. You helped us out.
Maybe a broadening out.
Look at the heat map. That's what's red and green today.
You know, some M&A is a good sign. That usually means there's some activity and value. So I think the case comes down to margins expanding for more companies, and I don't think that's that likely. So I think the market goes higher, and the big seven do well, relatively. So I don't think we're going to get a big broadening rally that everyone's calling for. A lot of people, can I buy small caps because they look cheap? Why not? I think you need to believe their estimates are more achievable. Their margins are going to expand more. Look at what the big seven are reporting. I mean, I don't think they're reporting relatively disappointing numbers. I mean, so when I look across, I mean, I don't know, maybe Microsoft's going to take longer to get their stuff working. I don't know, maybe Google probably has some stuff that could be better than people think. NVIDIA, you want to bet against their numbers next. You know, so you look across the big ones. I don't think you want to say they're relatively worse than everyone else. The case for broadening is probably labor costs come down a lot. You just went through that algorithm. I don't think labor looks like it's particularly weak. Materials are up from the bottom. They've come down, but they're up. So I don't know if that headwind to tailwind is going to be that awesome for those companies. So I think, my observation would be breadth is not that likely. The second thing I'd say from these recent meetings is I don't know one person who was like, I looked at equities versus bonds at the beginning of this year. I decided equity risk premium is garbage. I was way overweight U.S. equities, and I owned a ton of NVIDIA. Okay, so I think the point is people are going to chase. All right, most people's numbers are not where they should be relative to when you just type in the S&P, you type in the Qs. And so I think we have some flows coming in a rally to year end. And maybe it's like last year where Jan 3rd, first, second, day of the year, it just all reverses again. And people are trying to figure out what worked this year that they sell. I mean, that's kind of where it feels to me from the, 10, 12 meetings I did in the last couple of days.
Well, is the upcoming earnings season going to be encouraging? Because you look at consensus, it doesn't sound that great.
There's been 2 or 3 major bulge bracket firm conferences and industrials and healthcare. And you look at the data coming out of those and you talk to people and you read what the companies say. We do it all, systematically. I think generally mixed to slightly positive is the news for this quarter. I didn't see any, maybe Eaton saying their backlog plateaued. I mean, there's a couple of data points where we know things are slowing, but I think you got to be worried about companies like that have very high inventory and are expensive. But across the economically sensitive data points, I didn't see much. And then the other thing that I think we always get torn is the S&P 500 is not the economy. The S&P 500 is a list of awesome companies that are like the best of the economy, right? So you don't necessarily going to have earnings collapse. And I think that's what we all get kind of torn with. So sure, we're going to, react once in a while when they're hawkish. But I think this is part of that Goldilocks of transitioning to lower growth. And I don't think the Fed's going to, ruin any of the economics of it anytime soon.
Okay, I'll take the other side, which is that even if the Fed is done raising rates, which is not clear that it is, and even and so the expectation is they don't cut early next year, there's still a lot of tightening going on. That's significantly higher rates. There's still QT happening. I mean, all of that should hurt financial conditions, and as far as the earnings outlook, raises the interest expenses for companies, doesn't it?
Yeah, and I think every institutional investor for months has been trying to figure out who's got debt that's due anytime soon and who's going to refinance it. So there are very few stocks there that people are like, oh, I didn't know they had a refi. You know what I mean? So I think it's more about what's in the price now. I hear you. I think in years 3 through 10, you don't want to say I paid 20 times forward earnings for equities when bonds are high. But in the next 6 to 9 months, it's very hard to make that short-term call on equity risk premium. We could have made the argument January 1st, and it's been a rip fest because earnings are actually 2023 earnings expectations are slightly higher now than they were in mid-February, and that's unusual. Typically, analysts are too optimistic, and then things are rolled. So I think the debate comes down to what do we really think happens to earnings next year? If they're up versus this year, then maybe the stock market can do okay. If people start thinking they're flat or down, then obviously we have a problem. So I my bias is kind of 70-30 bullish from here, just in terms of how I'm thinking about it, just because I don't think very many people are like pro rata participating and super psyched about their alpha and had the correct allocation. And I don't think earnings season is going to be bad. I think it's going to be okay. And remember, we have like the highest nominal GDP in our lifetime, and it's eroding from that level. It's not, so I think it's slightly better than people think. But the only thing I worry about is I think most people think we're going to end the year higher. And, so you always get a little nervous when you're singing the consensus tune.
Well, next time we'll talk about whether or not strikes or shutdowns can interrupt a chase going into year end.
I'm going to make a mental note to not come downtown during UN ever again. Yes. I'll tell you that. I gotta
Subway,
tell you.
baby.
Yeah, I did. I did the subway, of course, but walking meetings yesterday, Midtown, it was reminded me I gotta be on the road next year during these 2 weeks. So good to see you guys.
It is. Thanks, Adam.
The dots are stupid. Is that what it says? Is that our call?
Do you not agree with that?
Quote. It's a crowded call. I think everyone thinks that.
Sarah's not a fan of the dots.
I have never been a fan of the dots because I know they use them to send a signal, but they just don't know what's going to happen.
It's literally TMI is what it is.
It's too much.
TMI.
It's TMI.
I think that's the whole point. You go to Tribariat's website, you type in Powell, it says 0 search results. Why? Because why?
Okay, I'm waiting for them to say Alex Karp coming up. Let's see if they do. I think they're still doing the interview. I've had a lot of sources say they are. So let's see if they say after this commercial break they are. If not, then we won't do it.
Yeah.
I also
My
think let's name names. I like let's put names on the dots too, right?
No, that's part of the fun is guessing.
When you're in school, who made the team and who didn't. Let's see. Let's get it. Let's keep.
I bet Greenspan would hate the dots. Anyway.
Yeah.
Thank you.
Yeah, good to see you guys.
Good
all right.
To see you too.
Be well. Yeah.
As we head to break, here's our roadmap for the rest of the hour. Huge deal in tech today. Cisco buying Splunk for $28 billion. What it means for shareholders.
Plus more rate hikes and higher for longer. What the Fed's hawkish stance means for mortgage rates and the housing market.
And Palantir's Alex Karp joins us, his first television interview since that big AI summit last week in Washington. A lot more Squawk on the Street continues in a moment. Don't go anywhere.
Okay, so CNBC confirmed Karp is coming. The question is when. I want to stream it live. I mean, we haven't heard Karp talk in a very long time, so I definitely want to stream it live. Let's stay here. I don't think they're going to push it to 11. They said 10 a.m., so I would expect they're at commercial break. We should see it come on in the next 15 minutes, 10 minutes, and that's going to be a decent interview. I wonder who's interviewing. I don't think it's Kramer, because Kramer said he hates Palantir, so it's probably not Kramer. Andrew Ross Sorkin, maybe, but I think he was absent today on that actually makes sense. He wasn't on Squawk in the Box today. Such a weird name, Squawk in the Box, because I think he might be in California or in Colorado with Karp, so he might be interviewing him today. So okay, so we'll wait. We'll wait for 15 minutes. I'll let you guys know when Karp is on. I'll be keeping an eye on in my peripheral vision. Oh, that's a good word of the day. Peripheral. We haven't done word of the day yet. You know what? A word of the day is red. That's a word of the day. By the way, did you guys like the title? Let me know if you guys like the title. I thought I was going to make it, bond yields go up, blah, 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 Palantir deal. And then I was just like, you know what? I feel British because it's bloody red this morning. It's bloody red. And so I was like, you know what? That's the title. We're going to do that. Palantir 1407 down 5%, 4.6. So rebounded from that 13 level. SoFi did hit 798. SoFi did hit $7.98 today. It had just rebounded to $8.05, up 3.25%. on the day. So SoFi is up right now $8. It was just there at $7.89. The lady will interview Becky Quick. Okay. I don't think Sarah Eisen is interviewing him. I don't know. Sarah, I think if it's a Karp interview, it's a bigger interview. I think they're going to give it to one of the big dogs on CNBC. I don't think they're going to give it to some of the other people. So we'll see. Amit is like a groupie when Alex hit the stage. Yeah, basically. I mean, the guy's responsible for a lot of my money. So I thought Kramer changed his mind on Palantir. He did, but I don't know if they want him interviewing Karp. Granted, it probably wouldn't be the worst for him to interview Karp, because Kramer has a pretty big audience, but we'll see if that happens. SoFi at 805, NVIDIA 415, NVIDIA not catching a break. continuing to go lower. Well, actually, no, it was at 412 when the market opened. So I think it is up a little bit from when the market opened. So a little bit of relief. Truist. Are Truist doing buybacks or something? I don't get it. There's no reason on a day like this, Truist should be up 2%. Like that is, I just don't get it. Not a regional bank like Truist. 2% for Truist is phenomenal. That's amazing price action on today. So I don't even think they went red today at all. Truist is just held up pretty nicely. NASDAQ 13,000 rebounding. Wow, the NASDAQ rebounded pretty. It was down almost 190 points, and now it's down 130. So we're seeing a little bit of the dip get bought out. S&P 500 also at 435. There you go. It was at 434 just a second ago. Palantir was at 1370, now at 1407. SoFi at 810. It was just at 798. We're seeing a little bit of a market, not a recovery, but a little bit of a dip buy for sure on some of these companies. PayPal at 59.35. It was at 59.01. ARM at 50.66. Tesla 257. Tesla's not getting bought up at all today. Tesla is still pretty red on the day. It's a good time for Palantir to do its buyback. You know, I wouldn't be opposed for Palantir to take maybe 50 million out of that 1 billion they allocated and put it into buybacks. I wouldn't be opposed to that. 50 to 100 million, 1/10 of it. It's not a bad idea today. I mean, again, I don't know how much Palantir wants to get greedy and wants it at 12 or 11, but I don't know. 12 or 11 is, we got to see a massive market correction, at least 10%, I think, for us to get to 12 or 11, because there's not going to be any company news. It's going to be a pretty boring semester, like we're in school for Palantir for the next 3 months. There's only good catalysts. There's S&P 500 inclusion and the NHS deal that's going to be announced in, I think, a week, September 28th. So there's not really any negative catalyst for Palantir to really just dip by itself and the market to not dip with it. So I would imagine something would have to happen for it to go down harder. Let's go back to CNBC. They're talking about the Cisco deal that was announced today, $28 billion. Let's see some of the coverage they have on that.
In this space, not just cyber, but just software in general, strategic.
I think M&A is coming. This was, I had no idea that this one was out there. It has been a perennial takeover candidate, has been Splunk. And there were talks prior, actually, to the current CEO taking the reins, but with Cisco. But generally speaking, yeah, I am starting to think that, and again, we're coming off a low base, but things are going to potentially heat up. This is obviously an important deal and one of the largest of the year.
Yeah. Cisco is the worst performing Dow name at the moment, below the 50-day for the first time since May. Splunk, not the only software name on the move today. Let's get to Dom Chu with the breakdown and more. Hey, Dom.
All right, so to the point of that discussion, some of the other bigger cybersecurity stocks, Carl, Sarah, David, like CrowdStrike, Palo Alto Networks, and Fortinet, are mixed in early trading on the heels of that particular deal. Splunk, though, driving the upside for CrowdStrike, not as much so for some of the bigger names on that hybrid kind of cyber side of things like Palo Alto and Fortinet. They're down about 1.5% to 2.5% there. Also on the technology side of things, keep an eye on those computer chip stocks. Broadcom in particular, down in large part on a report from the information that Alphabet-owned Google has talked about trying to ditch Broadcom as an artificial intelligence chip supplier to move that effort possibly in-house. Also looking to replace Broadcom with Marvell technology for the networking interface chips that it uses in data centers. Now, Broadcom is in the S&P 500 tech sector, and it's down 3.5%. And of course, Alphabet is a mega cap S&P 500 comm services stock. Marvell, though, up about 1/3 of 1%, not in the S&P 500 tech sector. So keep an eye on those names. I'll send things back downtown to you folks, Sarah, at the stock exchange.
All right, Dom. Thank you. Guys, I thought of another potential synergy between Cisco and Splunk.
Tell me.
They are both sponsors of the McLaren F1 team. Together, teammates.
Really?
As is CNBC. Anyway, I'm sure you asked him about that. Sure,
that was our first question.
Yeah, okay. Fed holding rates steady, but penciling in another hike before year end and signaling higher for longer. What that means for the housing market that is showing cracks. More data this morning to chew on. We're back in 2 minutes.
All right. So it looks like they're doing Karp at 10:30. That's what it looks like if I had to guess, 10:30. So it's going to be about 7 more minutes and then we'll hear from Karp. Let's look at some other stuff we can look at to see what's going on until that occurs. We talked about the new Palantir deal that came out this morning, new press release with CAS announcements. Wasn't the biggest deal in the world, but it is good to see a little bit more AIP adoption from what's happening. And we'll get some more coverage. Oh, let's actually get some coverage on this. We talked about the Hollywood studio strike coming to an end. Let's actually get some coverage on the writer strike coming to an end.
Of maybe zeroing in on a deal to end a writer's strike that's lasted months. David Faber joins us now. I guess it's not totally out of the blue. Did you have an inkling before you started hearing about this yesterday that there was? I was pessimistic about it. What happened, David?
You know, they've had some very constructive meetings, in particular yesterday, Joe. But I had been hearing at least some hopes that face-to-face, and they had met face-to-face in late August, but face-to-face meetings would bring a breakthrough. Now, again, you don't want to get too ahead of yourself here, but late yesterday, a number of people in the writing community I know seemed very optimistic. That may have been tempered a bit by a memo that then went out and said, hey, we met today, we're meeting tomorrow. But nonetheless, did get me to make a bunch of calls. And I, you know, what I picked up from both sides, from people close to the negotiations on both sides, was a level of optimism that they had not seen in the past. And a hope that they can finalize something as soon as today. They're meeting at 9 a.m. Pacific time again. And the expectation is that there are very few items left that they really need to nail down. Now, if that were not going to be the case, if the writers come back in, apparently, as I've been told, with a longer list of what they say are open items, that might stall things significantly or even might result in a, again, walking away of the two sides for some period of time, Joe. So, you know, you never want to get fully ahead of yourself, but without a doubt yesterday, and again, on both sides, more optimism certainly than I've sensed in terms of speaking to people around this. Nobody giving me the specifics in terms of what's been offered and or already accepted. But you can imagine, obviously, some of the key issues if you want to take a look back at what the writers had to say in late August when those talks sort of didn't quite get there, didn't really get to the finish line, but did make some progress. You can get a sense, obviously, residuals, AI, a number of other streaming, certainly so important here. 9 a.m. today, we'll see, you know, if they can get it to the finish line.
David, we had spoke with Matt Bellany from Puck earlier this week, and he had a theory that I'd talked to some other people about off the record, and they kind of agreed with it. Just this idea that transparency was going to be a big part of it, that would be the thing that they had to kind of give on. The idea that streaming services will have to tell the writers how much money they're making on each, which is the most successful, so that they can get paid more, like they would have in the old days when these things went into syndication or different things. That was going to be the big sticking issue, not finding some pay increase between 4% and 8%, that's not a big deal. Writer's room, probably not something that would be there, but that would be the main sticking point. Is that the sense you've gotten from the people you've talked to around this too?
You know, Becky, it's certainly been a key issue, but I don't know specific to yesterday and what progress was made about that particular issue. I can refer to what we heard from the writers in late August, which was that at that point, the companies, and Ted Sarandos is in the room, of course, from Netflix, and Netflix has been known as perhaps the most reluctant to give up any real information to its creators, to its writers, and to those who work on its shows. They did say at that point they'd gotten a major concession because 6 WGA staff would be allowed to have limited streaming viewership data for the next 3 years. The idea being that they could come back in 2026 and ask once again for viewership-based residuals. Right. But again, that didn't seem to get quite there.
So it does look like the negotiations are getting better with the strike actor union and the Disney studios and Netflix studios. And if that happens, you know, it's going to be better to find a way to implement AI without these people losing their jobs. Let's get back to CNBC. Karp should be on in a few minutes, and they're talking about housing right now before Karp.
Rates go to 8%. We're going to see buyers accepting these rates, and we are seeing more all cash offers. In New York City, Manhattan, 60% of purchases were all cash, and in the country overall, it has historically been around 24, 25%. Now it's in the 30s.
Wait, 8% you think is a breaking point, not 7. A lot of people thought 7. So that would suggest that the Fed has more work to do.
He doesn't want to say that.
I definitely don't want to say that. No, I think 8% will be a shock to people. However, at this rate, 7.5%, I don't think we're going to see any big change in demand at 7.5, 7 and 3/4.
And prices not coming down?
Look, although we saw existing home sales down year over year about 14% this past month, prices were up 4%.
Memo to Jay Powell.
But higher for longer, though, it can't be good for your business.
Higher for longer isn't good for the real estate market, but it does look like at 4 million seasonally adjusted annual rate of home sales, you've seen this now for several months in a row, that is the bottom, given that people have to move.
Wow. Robert, thank you for joining us. Appreciate it.
Thank you.
Robert Refkin, reality check there on housing from Compass.
Well, still to come right here. We're going to have a big interview with Palantir CEO Alex Karp. We'll talk about the future of AI, why pausing that technology's rapid development is, quote, a really bad strategy. First, a quick programming note. We're just a week away from CNBC's Delivering Alpha.
Okay, so Karp's up next. He should be there next. And we will see what he has to say. I don't think he's going to say anything that interesting or unique that he hasn't been saying. They'll probably talk about AIP growth and some of the updates with that, which is pretty encouraging, but nothing like super insane that we haven't heard him say before, especially in the context of AI and the future of it. SoFi at $8, Robin at $9.91. Market's recovering a little bit in terms of just the dip being bought and companies going a little higher than they were when they opened. Obviously, today is still a pretty bad day in general for some of these price actions that we're seeing. I think he will make some announcement. Interesting. You think he's going to make an announcement? Maybe he announces a new company that they're working with. Maybe, does he announce the NHS deal today? Does it happen today? Do we see Karp announce it today? That would be crazy. That would be absolutely crazy if he announces something like that. Probably won't. I mean, I don't know if they got the NHS deal. I don't know how they would announce it. I feel like they would do something a little different than go on CNBC, but maybe, who knows? We'll see. We'll see what Karp has to say and what he has to do. 2008 wiped out half my portfolio. This dip is cake comparatively. Yeah. I mean, this dip is down 3%. Obviously, being down 50% in 2008 was a lot. Whereas even 2022, I mean, look, if you owned Meta, you were down 80% if you bought in the 300s. So, I mean, look, 2022, I know a lot of people say like it's rough, but everyone expecting this massive recession. In 2022, we did have a recession from a technical perspective in terms of negative GDP growth, but also we had equities that got destroyed. I mean, like Google was at $88. Google, it was at one point close to below $1 trillion company or right at $1 trillion market cap. Like Google makes $9,000 every second. Like, all right, CNBC is back. Let's see if they bring on Karp, and let's get into it.
In Washington this morning to meet with members of Congress. He is set to sit down with President Biden later today as the president tries to get congressional approval for $24 billion in aid to Ukraine.
This is also big news. I mean, Zelensky meeting with BlackRock and JP Morgan to get money. That's interesting. BlackRock and JP Morgan own a lot of shares in a lot of companies. They might be pitching some, companies and services and products. It'll be interesting to kind of see how it goes from there. All right. I think they're getting through this final news update, and then we should likely see Karp either here or after another ad break as well. I lost over 95K in 2022. Yeah, 2022 was pretty rough for a lot of people. All right. I think he'll be on now.
The co-pilot. Hey, Steve.
Hey, Carl. Yeah, so Satya Nadella, CEO of Microsoft, was just inside here at Microsoft's launch event today. He announced that Copilot, that's the AI assistant that is coming across a bunch of products and services from Microsoft. That's coming out for Windows 11. That means anyone with a Windows 11 machine can use Copilot starting next week, September 26th. That's the date. It's going to be included in a free update to Windows for those current users. If you don't have Windows 11, you're not going to be able to use it, but you can update it. And they're going over the features now. It's going to be incorporated in everything from your Outlook email to Paint and even to your cell phone. It can take in text messages, from your cell phone and kind of interpret those and help plan your day and things like that. They're going over a ton of different features that Copilot's going to be able to do. So there's more to come. And we're also expecting some new hardware, Carl. This is, in fact, their annual Surface event. So some laptops and tablets on the way, too, as well. Guys, I'll send things back over to you.
Well, Steve, don't want to stop you from getting back in there and hearing about those features, but just put it in perspective. I mean, this is a significant moment in terms of for generative AI, right? What it's going to be, $30 a month, I think. Is that the price point that's been discussed for Copilot?
That's
and I am curious how it's going to help you in your daily life.
Yeah, that is interesting. So that is they haven't announced for the enterprise version. That's the version that's for Microsoft 365 that you're talking about. That's $30 per user per month. I haven't heard them announce the availability for that yet. This is just for Windows 11, David. That's okay. So when you fire up your Windows machine, you're going to be able to use these features. As far as that enterprise version, we're still waiting to figure out when other companies can go in and buy that. They haven't announced that quite yet.
All right. We'll let you get back in there. A lot more to come there.
Thanks.
Important moment there from Microsoft and Copilot. Steve Kovac, thank you. Quick update from me involving that writer's strike, of course, face-to-face meetings yesterday. And you can see the stocks are reacting to our reports that they're close. 9 a.m. Pacific time is when they get back together to try to, what I've been told by a number of people familiar with and close to the negotiations, hammer out a final agreement between the producers and the writers that would end the WGA strike. Again, always unclear until you're actually there, but the hopes were and the optimism sort of seemed significant yesterday on both sides that they were down to few enough issues that they might even been able to conclude yesterday, although again, that remains somewhat unclear, and the hope is they can come in today and hammer those out. We'll obviously keep you apprised as there are, and if there are developments. Again, they don't start until 12 a.m. Eastern, 9 a.m. Pacific with that. Well, let's get to some other media news this morning as well. Rupert Murdoch stepping down as chairman of Fox News and News Corp. And for that, we'll bring in Julia Boorstin. Of course, Julia, hard to argue that he is not the most significant man from media of the last, let's call it, 40 years, I think, in terms of the influence that he's had.
Yeah, it certainly had a massive impact on the media landscape. And if you look at the way he built an empire and then split up that empire, splitting off News Corp from Fox and then selling off those Fox Entertainment assets to Disney for $71 billion, really shaping the landscape that we're in today. And the decision that he made to have those Fox assets really focus in on live news and sports, many people sort of questioned that at the time, wondering how much potential there was there. But now, of course, in light of cord cutting, that live component is seen as particularly valuable. And I just have to say, David, we should not be surprised that he's stepping into this emeritus role. He is 92 years old. So perhaps it won't change much in terms of the day-to-day, but it does mark certainly the end of an official era at News Corp and Fox.
The stepping up of Lachlan is already running Fox. We know that, but now he's also chairman or been co-chairman. Does it mean anything in terms of Lachlan's overall responsibility? Obviously, he's not overseeing News Corp, but that is still a Murdoch-controlled company as well.
Yeah, I mean, I think that this change in title for Rupert Murdoch may not really change much in terms of the day-to-day. But I think if you look at the future of these two companies, you have to see News Corp, which was originally really a newspaper company, increasingly becoming a data company, becoming a company that's focused on sort of digital content, and whether it's for real estate information or sort of the digitization of the subscription business of the Wall Street Journal, really a shift there. And then when it comes to the Fox business, which Lachlan Murdoch is entirely running, this question of how they're going to survive in this new streaming landscape.
Sorry, I was muted. For those that are just joining, we are waiting for Karp. They did say Karp was going to come soon. Apparently, he is able to go for longer than expected. So he's not. He's not here yet. It's probably going to take them. I'm keeping an eye on it. I think it's 10:40. Probably in like the next 5-6 minutes, we should have him. Now, granted, I feel like Karp coming on CNBC is like buying the dip. I was like, Palantir at $20 seems fine. Palantir at 18 seems fine. Palantir at 17 seems it's basically what they're doing with Karp. It's like, oh well, he'll be on, and they're gonna make us wait. He should be on soon though. We're getting towards the end, so give it a little bit, and he should be here. They're saving Karp to keep us Palantirs glued to CNBC. Or maybe Karp's gonna they know Karp's gonna say something that's gonna look at this stock 14.18. Wow, went from 13.72 up. I think it's here, or they might be previewing it. Let's see. All right. Okay, well they clickbaited me again. They showed the Palantir stock, and I was like, oh, it's time. These guys, oh boy. Yo, the one thing I noticed about TV, so I got this YouTube TV subscription like 2 weeks ago, okay? Because my uncle wanted to watch tennis, and he was like, turn on the US Open. And I was like, first of all, what's the US Open? Second of all, how do I turn on the US Open? Like, you want Netflix, buddy? We got some Netflix here. And then I realized, oh, it's on TV. There's this thing called television. No, I'm just kidding, by the way. I had linear television for a long time in life. That was a joke. So I get YouTube TV, and I started watching CNBC in the morning recently as I go to the gym. I just have it playing. And there's a lot of advertisements, bro. There's a lot of ads on TV. And it's the one thing I'm not conditioned to, because the past couple of years, I've like not really watched ads. And a lot of these ads are from pharmaceutical companies. I mean, this whole conspiracy theory that the media companies are bought by pharma. I'm looking at a pharma ad right now. Like, it's a lot of pharmaceutical companies, bro, that advertise here. Like, a lot of them. And so one could argue that, yeah, the hosts are not going to say anything bad about the companies that's literally paying their salary. I mean, almost every other commercial is like, do you want this drug? Do you want this drug? Do you want this drug? And I'm listening to it like, damn, yo, do I need this drug? Should I look into this? Like, it's just a lot of advertising. Coming up next, 5 ad breaks later. Yeah. And I think that's why linear TV is dying. I mean, the model is just not as strong as people thought it was. You know, all right, put in the chat, how many people do you guess watch Squawk in the Box with Becky, Joe, Andrew Ross Sorkin? Just put in the chat, how many people a day do you think watch? I have the number. I'll let you guys know after I see some guesses, because I was surprised by the number. I didn't expect the number to be what it was when I checked their actual ratings. But I guess it was enough people for these advertisers to continue to pay for this. At least 5,350K. Okay. Let me share my screen as well, because he'll probably be on next. 3 million. Okay. Oh wow, I share it right when we get to an ad. 300,000, 1 million, 100K. Okay, so the number of people that watch it every morning live, about 110,000. Now, that's not bad, but honestly, I was shocked. I thought it was going to be like 500,000, 800,000. It's 100,000. Like, if you think about it, Meet Kevin can get 10,000 people live. And so you think of Meet Kevin getting 1/10 of CNBC, which is like a whole production studio. It's kind of crazy when you think about it. So, I mean, they've definitely been disrupted. I'm sure those numbers were higher 10 years ago when there weren't alternative sources. But 100,000 people, like 100,000 is a lot of people. It's just like, I don't know. Now, granted, the people that are watching it have money, right? They're business people. So it's good to advertise against that segmentation. That's why the advertisers are paying a premium. But it's still 100,000 is, I just thought it would be more for some reason. At 110,000 people have loads of money. That's correct. All right, we're back. Here we go.
Software for Government, or S4G Summit in Washington, D.C. today, focused primarily on AI and emerging technologies. Frank Collins down in D.C. and joins us with a special guest. Morning, Frank.
Hey, good morning, Carl. That's absolutely right. I'm here with the co-founder and CEO of Palantir, Dr. Alex Karp. Alex, thank you so much for being here with us.
I'm delighted to be here.
All right, so you're kicking off this inaugural summit today. You have a lot of U.S. leaders here in government and defense and other areas of the government. Right now today, with so much focus on AI and the potential of AI, what is Palantir's focus when it comes to its work with the U.S. government?
Well, there are two things we're working on. One is Palantir related, but arguably even more importantly, the U.S. Has every major provider of AI, which is in every other industrial revolution, you've had a just diversity of countries that have had the talent and the products. In this revolution, they're really all in America. So how do we get the U.S. government to use innovation from providers? Very few of these providers work closely or closely enough with the U.S. government. Now, in part, that's because many of these providers have had a somewhat timid view of helping the U.S. government. The Silicon Valley motto has been, I get rich, you get nothing. And they've obviously often extended that to the U.S. government. So my focus and our focus in D.C. is one, to basically embarrass other people in AI to work with the U.S. government. It's like, we're doing very well here. You should also get involved. To talk to legislators, to explain to them that way too few of our dollars are being spent on AI. Palantir is one of, I think, the first company since the 50s that has produced government products that are in high demand commercially. So how do we get more companies that have commercially available products, meaning products that are proven in a competitive environment, into the U.S. government? And how do we share knowledge? So that's the part that we're doing here. We have a lot of clients, many of which are sensitive, and they get to talk to each other here about what they're doing, what's worked, and what's not.
All right, we'll talk more about your clients in just a bit. I do want to ask you, just a few days ago, you were in Senate Majority Leader Chuck Schumer's AI meeting. It was a closed-door meeting. The press and the public not in the room, not allowed in the room. A lot of big-name tech leaders were there. We're talking Bill Gates, Sundar Pichai, Mark Zuckerberg. What was said there? Can you give us your takeaway? The headlines were it was all about regulating AI and government regulation. And also, I want to ask you, do you think the public should have been allowed in the room?
Well, so the overarching discussion was, how do you advance artificial intelligence, meaning how do we allow especially commercial enterprise in America to adopt AI, develop AI, and provide it to the U.S. government and enterprise while simultaneously mitigating some of the obvious risks of AI, namely, one, we don't know where the road is going, and what happens if generative AI becomes so powerful that, in fact, it's a risk to humankind. Okay, so that is a real issue, and there's a lot of consensus that we have to have some way of mitigating the risk. Then there are other discussions of, on the way there, how do you have artificial intelligence that has governance, guardrails, can prove that it's not discriminatory? And then there's the issue I'm passionate about is, given the risks, we also have to model as one of the greatest risks that our adversaries, namely Russia or China, develop tools that are vastly superior to ours and change the world order. I thought it was a very, very productive discussion. I guess it's an unpopular view that occasionally you have to begin discussions in private, but it is my view. And I'm sure at some point these discussions will be open and no legislation will happen. But in the end, we all have to come in there and say, this is what I really believe. It's already very hard to get people to show up and kind of go naked, but they're not going to go naked in public with public scrutiny. And there's a super heterogeneous group of people there, from union leaders to tech leaders. Among tech leaders, you have kind of more corporate-y people, then you have the freak show. So getting
You're referring to yourself, but self-deprecation,
us,
understood. I do want to ask you about one thing. We just showed some video of you sitting next to Elon Musk, and you said, how do you get to use AI in a way that doesn't hurt humanity? That's a question that he's been wrestling with. He's been talking about the dangers of AI. So were there in-depth discussions about how to use AI responsibly, as you mentioned, so it's not discriminatory, so it doesn't actually hurt humanity?
Yeah, that's what we discussed, and there were
do you have details? Are there some details you can share?
Well, I mean, I can tell you what I said, which is I said, look, there are two camps. There's those that think AI is safe and those that think it's dangerous, and I'm in a third camp, which is it is dangerous, and if we don't actually work on it, our adversaries will, and we will lose all of our human rights. That was my position, and I think that is what am I doing in DC? What am I doing every day, both as an individual and as the co-founder and leader of Palantir, is pushing America to adopt AI with governance responsibly in the commercial context. What does governance mean? Governance means you can look at the output of a large language model or the inputs into algorithms and say, is this something that protects our data, protects our health records, make sure they're not being used in a discriminatory way? And on the battlefield, is there some human supervision in the chain where we make lethal decisions? And where does that data come from? Who controls it? Who can ratchet this back? Who can ratchet this up? And do we have superiority that is so great that our adversaries are afraid to attack us? The standard for the US can't be parity, because we're basically benevolent actors in the world, despite discrimination, certainly from the comparative perspective, maybe the only benevolent actors. And the best way to make sure that we have a safe world is to make sure that our adversaries know that our weapons are far superior to theirs. That's what I'm interested in.
I want to ask you more about the meeting. Did you have a chance to speak directly with Senate Majority Leader Schumer? And do we need an AI czar, Department of AI regulation, or something like that?
We are going to have regulation, and and some forms of regulation I support. Like what the form of regulation I support is we must, the U.S. as leaders, control the risk to our civilization of out of control rogue AI. So we need, and it's both a combination, in my view, of regulation and people who can implement this, who are both technically and philosophically proficient. So it's a rare class of person, because you're going to need to be able to, in an unbiased way, look at what someone is doing and report if there's a risk to our civilization. And then there's...
I want to ask you, so you don't think the public should be at the early stages of a conversation with this much magnitude?
You know, my job is to produce technology that transforms and puts America and its allies in a superior position, and to advocate for governance structures. And I am doing this in public and in private. And what I can tell you is I'm telling you exactly what I tell people in private, whether it's Senator Schumer or leaders of the world or my employees or people abroad, whoever I'm meeting, I am telling you the same thing. So you can be rest assured that you're hearing in public what I said in private. And what I say in public and in private is there's a real risk here, but the upside is that America will outperform all other Western countries because we produce the technology, we have legal structures that allow us to implement it, and we have the best talent, and we're the most innovative. On the military context, we are poised to win, but we have to make sure we actually win when we're poised to win. It's not the same thing. And that's what I'm saying in public and in private.
So Alex, we have a question for you from the New York Stock Exchange.
Alex, it's Sarah Eisen. It's great to hear this color and the philosophy behind how we think about AI and regulation. I'm curious, though, what it's going to mean for your business, because there has been a lot of enthusiasm and excitement in the market around Palantir as an AI play. What does growth look like from governments, from commercial, from international, as we adopt generative AI?
I think for us and for everyone, what you're going to see is radical growth in the U.S., slower growth in Europe. Growth in the U.S. because people are going to adopt the best, most robust, most useful technologies, and very quickly. What you're going to see in the market, and then I'll get to us, is you're going to see in the market, you've had a massive interest in AI. Many of these products deliver poetry and will allow me to write an essay maybe I know nothing about. The products that are going to do well in the sense that people are going to pay for them are going to have output differentials. So you're going to change the margins of a business. You're going to rebuild a supply chain. You're going to move a company from an individual point-based company to a portfolio way of managing it. And those companies are going to succeed in the U.S. market. How are we doing? It's very early days, and you don't want to be out there being too optimistic, and we're being very careful to kind of move slower than we could, but we de facto cannot keep up with demand for our AIP product. We built these precursor technologies that are not understood yet, but the clients understand them because they are asking, how do I work with a large language model in a safe way, a government way, where I can make them more precise and change the underlying dynamics of my business within days. What we've seen is in the last month, a 50% increase in people using our AIP product in a month. So, the other thing about...
Can I interrupt you, Alex, for 1 second? We have another question for you from the New York Stock Exchange. Sure. I want to get some of our anchor questions in as well.
Hey, Alex.
Yes,
Alex, it's David Faber. I just want to follow up on that. In terms of productivity and what's going to be available to the enterprise as a result of the adoption that you're talking about. One step down from threat to humanity, but what about threat to workers? Where are you in terms of how many jobs will be replaced as opposed to potentially simply aided to go work on higher end things?
This is a super important question. Typically technology is misaligned with the worker. And so there's obviously a lot of concern among working men and women that, radical increase in technological development will lead to a decrease in jobs and put pressure on their salaries. I think AI incorrectly implemented. So not long ago, we had 1% of the US hospital care market. Now we have 16%. Why do we have, what is going on with this radical increase? We're making doctors and nurses more effective. We're making factory workers more effective. By the way, one of the most important attributes of AI that's not been discovered yet and will be discovered is you can take manufacturing that maybe has been culturally specific to Japan or Korea. And we have one company that is a Japanese company producing a highly technical product in America, just like they produce it in Japan with American workers. And why can they do that? Because through enhanced software, algorithms, and AI, we can control the manufacturing environment for Americans as if it was Japan. That means American work. So then you get the agility, creativity, ingenuity of America with methodologies we've not been able to produce here in the largest and most important market in the world. So I think, and this is a message that's going to take, we actually have to show rather than tell, because workers are going to be skeptical of it, but it's actually true.
We can keep this conversation going all day. Also today, you're announcing 2 new commercial customers in the private equity space. I know you said there's more demand for your products in the financial space as well. Dr. Alex Karp, thank you so much for your time. Thanks for talking to us. Hopefully you'll come back. We can talk more.
It's a huge pleasure.
All right, Alex, thank you.
Take care.
Back over to you guys. Thank you.
Frank, thanks. We'll be right back.
Interesting. So there was the Karp interview. I think that was 12-ish minutes, 13 minutes. I'll give a couple takeaways on how I felt about the interview, and then we'll keep going from there. So a couple of quotes from Karp. Number one, he said, when asked on AI growth, for us, you will see radical Palantir growth in the United States and slower growth internationally. He's pretty much said this the entire time for the past couple of months. The reason he's saying you're going to see US growth is because a lot of commercial customers, they're growing about 67% year over year in the United States. It was 30% last quarter. The reason for that is because you're seeing a ton of adoption from US companies that are accepting of AI, that are accepting of innovation. All the biggest AI improvements we've seen over the past couple of months have been from companies in the United States that have actually embraced it. So whether it's Cisco or Kaz Investments, which is the deal they announced today, or BP or Cleveland Clinic or Tampa Bay General, there's so many different clients around the world, even Miller's Ale House, which is a restaurant company, that are trying to experiment with AI. And as a result of that, in the United States, you're going to see that radical growth is what he calls it. However, he says internationally, you're seeing slower growth. And I think he's correct about this because unfortunately, European companies and Asian companies, they're just not as quick to embrace AI. And until they're as quick to embrace that, they're definitely not going to be buying Palantir's AI solutions, which cost a hefty amount of money. And so as a result of that, you're probably going to see slower growth internationally. That doesn't mean the growth is not going to come. It just might be 12 to 18 months from now. It might not be 6 months from now, as people think. He also said, in quote, we cannot keep up with the demand for our AIP product. We've seen 50% increase in usage of the product in a month. On August 7th, they had 100 customers using AIP. In September 14th, as per their latest AIP con, they have 150. So 50% increase month over month. When he says we cannot keep up with demand for our AIP product, I actually believe him. A couple months ago, I was a bit skeptical when he said we're getting 12 months of demand in 1 month. Just because, he's a CEO, he has to hype it up. He has to say that stuff. 150 customers, 50% month over month growth that are all integrated into a very thick product, now using it on a day-to-day basis and actually talking at your conference about why they're using it. It seems like he's correct on this idea that there is a lot of inbound demand. Does that turn into contracts, which eventually turn into revenue? That is the question. And we've got to see Palantir ultimately execute from that perspective. But it seems like the ball's in their court in order to execute. It's not really them having to go sell to the market why they need AIP. Almost every company, at least in the United States, is starting to recognize why they need something like an AIP and AI infrastructure to connect their LLMs to all their data, to make sense of all that stuff. The question just becomes, can Palantir capitalize on all that stuff? I think this was a pretty basic interview by Karp. That last question about employee replacement, honestly, not the best question by the host. They could have asked something better. Karp has said many, many times what employee automation will look like. In fact, Karp, speaking of Stellantis and the United Auto Workers, Palantir was one of the only companies, Karp being one of the main factors of this, that did not want to replace workers at factories. And a couple of years ago, they implemented Foundry within Stellantis. That's one of Palantir's clients. And the workers that were interviewed at the factory said, yeah, we think this is a tool. We don't think this is replacing us. It's helping us be more data-driven in the factory to make better decisions around car parts and manufacturing versus us being replaced by, Excel spreadsheets on steroids doing our job. And so Palantir's always had the philosophy that if you get rid of people, you are going to collapse the very fabric of democracy, because you cannot have a healthy democracy unless you have a healthy economy and society. In order to do that, people need a purpose in their life, and a purpose comes from a job. At some level, you need to have something to do every day. And so Karp and team have been very, evil. They've been very even keen on this idea that you don't replace people, but rather you give people what they need to be able to do and the tools they need to be able to survive. So it makes sense that AIP is not going to lead to some rapid job deacceleration. It can happen, but I think Karp and Palantir don't really want to orient the product to make that happen. They want people to become more productive. Final thing I'll say is he spoke on the AI summit at Washington, D.C. This is also where I think the host didn't really ask the best question, because the question was obsessed with why is this not happening in public? The reason it's not happening in public is because you've got the biggest, most important people in the world. They're not going to show that publicly yet. I mean, they're going to have to air out some dirty laundry and conversations and have back and forth in private. I think that's also the way, as Karp said, you get people to be naked. You get people to actually say what they're thinking on their mind, knowing that they don't have to worry about Wall Street Journal quoting every word that they say. And then after that, you have more discussions in the public. So what he said was that at the White House summit, where he was sitting with Elon Musk, he said the same thing that he's quite frankly been saying in public for a long time. China and Russia, our greatest adversaries, will find a way to make AI operational for them. If you don't believe in the adversarial and authoritarian values from that part of the world, then you have to utilize AI and operationalize it for democracy and for Western values. The inherent risk is that what if AI becomes too powerful and it kills humanity? And that is a risk. But the other risk is, what if other countries don't care about that risk? And because we care about the risk, we don't use AI, but they use AI. And not only does it kill humanity, in the process, you've got authoritarian regimes using AI to inevitably kill humanity. So there's a lot of nuance to this, but the number one thing I think we all can objectively agree on is that the United States should be a leader in AI, which for Karp means that the defense budget is going to be spending billions of more dollars on AI, which will obviously be good for Palantir and Palantir shareholders. But writ large, it will be good for the one competitive advantage, basically the moat that the United States has, which is software as our ability to out-innovate and truly out-compete every country in the world. Google, Microsoft, Amazon, Facebook, they have all come from the United States, and they've all come from the United States for a reason. There's a culture of innovation. When we see a trend, we chase that trend. We actually exploit that trend. We try to make that trend real for us. And AI seems like it's no different for Palantir's Alex Karp. And that's pretty much what Karp said today. And that's what we got. I think it was a decent interview. Nothing too crazy. Stock price right now on Palantir, 1420. So it was at 1372. Recovered a little bit from that 6 to 7% decline, now down about 3.9%. Not bad for Palantir, and S&P at 434 right now. It was a bloody day for the markets, recovering just a little bit, not as bloody as it was 30 minutes ago, but still obviously red today for Palantir. All right, that's it. Thank you all for watching. I appreciate it. This was a long 2-hour stream. It was a red day. I hope as a community we were all able to deal with some of the red. And obviously we got that Karp interview, which was awesome. So we got to deal with seeing him live and see what he had to say. Final thing for the day, word of the day, Selkouth. Selkouth. Strange and uncommon. Let's say today's market dip was a little bit Selkouth, and some would argue it wasn't Selkouth, given what Jerome said yesterday. But we'll see if it continues to happen later. Have you seen the headset? Have you seen the headset? Is there actually a Palantir headset? What's going on? What Palantir headset? What are you guys talking about? Palantir headset? Is there what headset? Is there more breaking news today that we forgot? Palantir headset. Well, they didn't announce it on their thing, so I don't think. Look, if they come out with a headset, that'll be kind of good. Background of the interview. Background of the interview. Hold on. Maybe we do have something a little bit here. Hold on. Arnie, did you tweet it? Let me check it out real quick. It was behind him in the interview. Oh, wow. Look at this. Okay, let me go to Arnie's tweets. Let's see this real quick. Here we go. Look at that. Interesting. Do we think that's oh wow, yeah, look at that. You see that right there mixed? You see how it says coming soon? Whoa, what a find. What a find. Holy crap. What is that? Mixed some. Yo, Arnie called it 1000%. Arnie actually, on the last podcast, Arnie called that we're going to have some type of headset. We did see patents for something like this. Interesting. This is probably for the battlefield, probably for military, probably not for consumers. If it was for consumers and they're competing with Quest, that'd be crazy, but it's likely for the battlefield. Yeah, coming soon, mixed reality. Let's see if that's for Palantir. That's interesting. That's some breaking stuff. Let's see. Arnie, we got a lot to talk about in the weekly. We got a lot to talk about. All right, everybody. Thank you so much. I will see you guys tomorrow. And let's see how the market recovers from there if it continues to dip. Bye, everyone. Thank you for joining me. See you later.